Okay, in this lesson, we're going to be studying the buyers, okay? So the buyers, to maintain grounds and to see where the buyers are in control and to see when the sellers end, this is very useful to understand that if you need to pick up some trades, for example, if you want to enter some trades that are in the long direction or the short direction, you need to know which direction the markets are headed to begin with. So this core concept is going to touch base on just the buyers. We're going to go through the buyers, we're going to explain it, and then we're going to go into some practice modes of looking at different examples, okay? So this is a chart of USD Japanese yen on the weekly chart, okay? I chose a very big time frame. We'll go into random time frames as well to show you that this concept holds true in any time frame. Okay, so when we're looking at USD yen here, to first focus on the buyer, we must look at the seller ending. Now, a sell or a downtrend happens with lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and then rollover. And then the uptrend is usually higher highs, higher lows, higher highs, and so on and so forth. So we look for the turn to happen into the market. Now, the moment the turn happens, that is the spot that you have to mark as that's the turnaround point. Okay? That's the breach, this whole area here. That's the breach. So you're going to keep that in mind and be like, okay, if that's the breach, anything above that is all buyer's territory. Okay? It's not seller's territory, it's all buyer's territory. So let's take a look at this. Let's go forward. Okay? The markets keep rising, and look at how the sellers are coming in. Now, this is a weekly chart. So when you see stuff like this for 3 weeks or 4 weeks coming down, a whole month, the market's just dropping, people jump in on the sells without getting an understanding of, wait a minute, this is the buyers are still in control of all these pairs. So we want to keep in the buy mental mindset that we want to be buyers, not sellers. Now, as this happens, we're looking at this area of, okay, so that's our recent high up there. This is our recent low down here. As long as we're not coming down to challenge here, the buy is still on. So we keep going. The market eventually starts to break. Now, this breach might be, did we make a higher high or not? Did we breach above or not? Or is that a faker? Okay, that could be true that it might be a faker, but that doesn't change the fact that it's still in the buyer's control. Okay, I hope that makes sense. I'm going to repeat it again. It could be a faker, but that doesn't change the fact that it's true that the buyer's in control. Okay, so this could be a range still going sideways, and he's attempting to go long. All right, so let's take it further. Okay, and the buyers finally breached. Now that they've breached, you can clearly see this is a breach, and that's a higher high. So this is going to act like the previous lower high. This is the next higher high. So we're going to put the line above here, but this is the breach area. He breached above here, so this is like your support and resistance. But just because it goes below the purple line doesn't mean it's a sell, because we're watching this spot. He can come as low as where the buyer began and still be in buyer's territory. Okay? So keep that in mind. We're going to go into details of all this stuff in the later lessons, but this lesson is for you to master just the buyers. Okay? We're going to take that further down. Okay? He breaches, goes higher. Now, we're not going to count this as a real breach, because notice the amount of time it spent there. Very little. It's as if this buyer just took a small break and keeps going. So we're not going to count that as a breach. Keep going. Keep going. Okay. We're getting some pauses up here. Notice it's all above this purple line and this circle. Buyer's territory. Buyer's territory. Okay. We breach higher now. Okay. So we're looking at a line up here now because of the pause up there. We breach higher, not so much higher. We're going to see if it's fake or not. We're going to put the line here because that's the recent low. And we're going to see, did it really go higher or not? Okay, it's maintaining grounds. And it's coming back in. Notice he's coming back in to challenge the same low. Has it switched yet? Has it switched yet? Has it switched yet? Has it switched yet? Nope. Still buyer's territory. It's challenging that area again and again and again. There we go. Now the breach has happened. It is now turning over to be on the sell side. Okay? So that is the example here on USD yen on the weekly charts. let's head on to some examples, some more examples for the buyers. Okay, in this practice video, we're going to be looking at Aussie yen on the 15-minute chart here. Now, this is going back to dated on 2016 on September 29th area, more or less. Now, again, so to be a buyer, you must first see where the sellers have ended their reign, so when the buyers can kick in. So let's take a look at the sellers here as they do their last lower low, lower high sequences. So let's do it like this. Okay, we got a lower high here. Lower high here, got a lower low here, followed by a lower low here. Now, the question remains is, at this point, when he was making lower low here and a lower low here, attempting to make a lower low here, and he didn't do it, and he re-attempted to make a lower low and he came right back in, goes to question is, was that a real lower low? Or is that a fake? Okay? Whatever the case may be, if that is a faker, if it is quickly coming back like that, we have to consider ourselves like, well, this is the previous high, and this is the breach that he did. The breach was right there, okay, in this area. That's his breach. He breached below that to make a lower low, and that's his recent high. Okay, because this high doesn't really count because it looks like the market's just going sideways here. As it gets up to here, we're still considering that this can't be a buy quite yet. Okay, this is an interesting spot here, and I'm going to teach you guys this in the upcoming lessons. This is a very interesting spot because it's a confusing state of mind, but it's also the money-making state of mind. Okay, there's a lesson called money spot coming up in the upcoming weeks about this. So this is a very interesting spot here. Okay. So we don't know if it's a sell yet, and we don't know if it's a buy yet. Okay, but all we can assume is it's still in seller's territory. As we keep looking and looking and looking, and this is the 78 price up here, which is challenging its recent highs again. As it gets up to there, he holds, and he breaches it. Now we've entered into buyer's territory. As we're entering into buyer's territory, we might be wondering now, okay, well, how do we see when the buyers keeping the momentum? Okay, so we start with a high here, making higher highs, making higher highs. The lows also doing the same, making higher highs, higher lows. Okay, in this whole sequence, we're watching, okay, where did the breach officially happen? Is it this piece here? Or is it this piece here? Okay, so the first one or the second one? Okay, for those of you who are speaking this out loud or thinking in your mind that it's the second one, that is the correct answer. It is not the first one. It is not the first one, because notice we were watching this area to be breached. And the guy who caused the breach is right here. So this is the critical moment here. So you can see how this differs quite a bit with support equals resistance, because one can look at it in a minute way and say, well, that's a support resistance, or that's a support resistance. But when we look at this in terms of buyers and sellers to see which direction are we going, we get a better understanding that, wait a minute, it's up here. It's all the way up here. So let's get rid of these lines, and I'll keep it very simplistic. Keep it like this and clean. Okay, it's right around this area. Okay. But we cannot forget where it began as well to understand that that's the area that it breached it, but his low is here. Before it, because his one low was here, he went higher, held, went higher, held, went higher. So this is the low of the spot. Okay, so we're watching these two areas, the breach and the low. Let's move it forward. Going, going, going. To most people, that may look like the sellers are here because it's broken that little support, teeny bitty support equals resistance. But remember, it's the buyer's game still. It is the buyer's game. So the buyers are waiting to take their turn again. We're watching this area carefully to see the higher high sequence. No higher high yet. Just a tad bit. It broke out, came back in. Okay, now in this stage here, very interesting spot. Did we make a higher high? I'm going to make it a dotted line. No. The market just ran up and ran back down. So if that's not a higher high, then the low and the breach is still counted as this one. It is not the new low here and the breach up there. We never made a higher high, so how can we assume that this is the next anchor, the next ground, the next barrier? So as it starts coming down like this, everyone jumps on the sell side. But we're still looking at this in the terms of buying momentum. The buyers still have the ball. Okay? We're watching it closely. The lows never get breached here. It's pushing and pushing and pushing. Reattempt down here. It's creating a range above in the buyer's territory. Maintaining grounds. Maintaining grounds. And here you go. Voila. Okay, so your buyers come back there. Okay, so hope this example was good. Still, we need practice. More practice makes perfect. On to the next example. Okay, in this practice example, we're going to be looking at Euro-Yen on the 15-minute time frame. Okay, so this is Euro-Yen on the 15-minute time frame. This is, I've dated it back to September 28th, more or less. So again, as a recap, to be a buyer, we must first follow the sellers until the sellers, lose the ball. Okay, so let's take a look at this carefully and see. Sellers were maintaining grounds up until this point. They were creating lower lows, which is right here, and lower highs, which is right there. Now, in this process, lower lows and lower highs, as the rollover happened, notice that we're looking at this area very carefully. Okay, he rolled over, started going high. It's still at this point, it does not mean it's a higher high and the buyers are here, because we are going to challenge this high. Okay, if we cannot breach that high, it's going to turn into a range. So we need to see this very carefully. Now, once the breach happens of that area, we want to confirm that it's above and stays above. Okay, and in this particular case, the market has switched directions and the buyers are in control. Now, here's an important piece to notice. The part where the turn happened and he broke above this area, the turning piece is this zone here. That's the turning piece there. He went to challenge this area, and if you drag it across, yes, he made a higher high from here, but the turning point is here. Now here's the difference that you're going to see between support and resistance, and understanding the difference between buyers and sellers. Now, as we keep going forward and seeing that the market is starting to pull back, the average person will look at this area and say, that's my support equals resistance. Okay? And once that breaches, it's like, oh, I should prepare for my sells. I should prepare for my sells. Okay? So, if you keep looking at this area, now we have a higher high sequence from here to here. That's a higher high. Okay? Higher low sequence from here all the way to here. So the highs went higher like that, and then the lows went higher like that. Okay, so the higher high sequence, and then no higher high. If it's no higher high, it does not mean it's a sell yet. Remember, this is a common mistake that a lot of traders also make, is if it's not A, they automatically assume it's B. No, if it's not A, it means it's not A. It's as simple as that. Okay, it does not mean jump to the opposite. Okay, so currently it's not a higher high, which means it's not uptrending, but the watch area is this part where it breached it, and it's this part, which is the low where it began. Okay, these are the challenging spots. So we're watching the market come down and say we're still in buyer's territory, still in buyer's territory, still in buyer's territory. We're going to watch this area very carefully. Okay, still in buyer's territory. Okay, reattempt to make a higher high. Still nothing. Still in buyer's territory, still in buyer's territory. Challenging the lows. Challenging the lows. Still in buyer's territory, still in buyer's territory. Okay, could possibly turn into a range because we're reattempting to hit the highs again. Still in buyer's territory, still in buyer's territory. Keep going. Notice how we're turning into a range here. Okay, but it's all buy biased. The bias is for a long. It's not for a short. Knowing this little bit of information, there you have your higher highs. Knowing just this little bit of information, It's so simple and so common, yet is overlooked by so many individuals. Okay? So going through this material is going to make you understand and see that, okay, I'm not going to be the 95%. I'm going to be better than that. I'm going to be aware to these simplistic things that actually stick out and tell me that it's not a sell. Just because it took a dive here earlier, that doesn't mean it's a sell. I'm aware of the situation by reading the situation. Okay? So again, we're going to plug all this in together, and this week we're just going to master buyers and sellers. Once we're done mastering buyers and sellers, we're going to bring in the next piece, and then the next piece, and then the next piece. And by the end of your entire period with the course, you're going to have a solid understanding of, man, I've been trading X, Y, and Z strategy for X amount of years. I can see where all the mistakes are happening. Or I've been using this trading system. I can see where all the flaws are happening. I can fine tune it to make it even better. Or you can be looking at, I'm looking for a strategy, and as you pick a strategy, you can be like, oh yeah, I can use this strategy at this moment, but I cannot use it at that moment. You start to get a better understanding of when it will work and when it will not work. Okay? So this is what we call this the core. This is the core fundamentals of trading. All right? So on to the next example. Okay, in this practice example, we're going to be looking at pound Aussie on a 4-hour chart. It's a different time frame, just to show you that we can use this on any time frame that we want. The concept still applies, is the same, which is where are the buyers and sellers for your time frame, right? Who's in control? Who is taking the markets to where they want to go? So to be a buyer, since we're working on buyers, we want to work on where the sellers are, throwing in the white towel, or putting up the white flag saying, okay, enough. So the sellers, lower high sequences, lower low sequences, comes all the way down to here, lower highs, lower lows, down, down, down. And then the market starts to take a turn. As it starts to take a turn, he doesn't use the spot here. So let's put a line of, here's the breach to the downside, where it made a lower low and it held there for a bit. And here is its high. Here is its recent high. So where these two areas are completely watching. It can breach above here and still doesn't mean it's a buy. It needs to challenge this guy and break him. Okay, once he breaks him, notice that the guy who does the breaching is down here now. This is where the breach happens, because that's the guy who was supposed to sell, and now the breach happens, and now it's onto the buy side. Now that it's onto the buy side, and he's even crushed this high, well, let's check the crushing. Yeah, he's crushed the high, and he's maintaining grounds above it, which means he is now making higher high sequences, and the buyers are moving in. Okay? Now that the buyers are moving in, we want to take a look at not only this breach area, but also the low, which is down here. Okay? If we can come all the way back down to here and even breach this area, it doesn't mean it's the seller's turn. It can still mean the buyers are still around. Okay? It's watching this area carefully as well. It's both of these areas. Okay? So don't get that mistaken. So let's move it forward. Here comes some sellers. Okay? We're watching higher high sequences trying to come in. Okay, no higher high, which means these levels still hold. If we have a higher high, it's new levels. Coming down very, very sharply. Okay, let the majority of the market at this stage turn sellers. That's fine. You keep your eye on the ball of, this is buyer's game. If this is the buyer's game, I'm not interested in the sell side. Okay, the market tries to turn. Bounces off the same area. We're still not worried about that because we're trying to see it's still in seller's territory. Okay, it's not a trading system yet. We're not discussing how to pick this up. All we're discussing is whose turn is it? It's still in the buyer's area. All this attempts like, oh man, no higher highs, must be a seller. Nope, it's still a buyer. It's still in his court. Okay. We're going. No higher highs, but no lower lows either. We're turning into a range. No higher highs, no lower lows. We're still in that zone. Okay, we breached the line, but we came right back. Okay. Reattempt to make a higher high. Now, You might get confused. Wait, I made a higher high from there. No, we're trying to make a higher high from this guy. Okay, so priorities. Don't forget priorities. Okay, take a look at the picture, the big picture. Be that bird in the sky and understand what's going on by looking at the entire terrain. Don't just look at the minuscule stuff. Okay, so keep going, keep going. And now you're starting to have a breach, but is it real? Is it holding above? Maybe not. Maybe not. Let's take a look. It's still range mode. Still range mode. Fighting, fighting, fighting. Higher high. Okay, now we have a official breach. And there you have your buyers again. So now, there's two sides to this. Okay, there's two sides to this. So, and why I'm teaching you this is, most people, you're in this course 99% because you're a trader. There is 1% of you guys who are watching this course who are investors, right? You know, we have some very, very big investors who are just looking at, you know, Naveen, show me how I need to move my money. I'm not interested in sitting there day in and day out and like taking out a few pips here and there. I'm interested in, what do I do with my money? Where do I hold it? And how do I know how long I can hold it for? This is the general concept of, you know, trend trading. How do you trend trade? You understand the buyers and sellers momentum like this. Okay, so hopefully this helps. We're gonna move it on to the seller sector now. Okay, we're gonna understand how the sellers work, and we see to do sellers, you must know when the buyers end, when the reign of the buyers end. So let's go on to the lesson for sellers. Okay, so in this lesson, we're going to be discussing the sellers and how they take control, and when it's our turn to understand that the buyers are done and it's time for the sellers. So to focus on the sellers first, we must first understand when the buyers end their reign. Okay, so in this particular case, we can see that on this pound CAD 60-minute time frame here, that the buyers were taking control in this area up until this stage, and then the sellers kicked in. So we want to get an understanding of this area first. Okay, so let's take a look at this very carefully. So the buyers keep making this high, higher low, higher high, higher low, higher high, higher low, and then no higher high. Okay, followed by a lower low. So the reign of the buyers has ended and the sellers starting to dominate. Now, if the sellers start to dominate in this sequence here, notice how the recent lower high was this spot right here. So what we're going to do is we're going to mark this area. That's the spot right there. So if you look at this as the sellers began from here, can you safely say that all this activity is still below that spot? And if yes, you can automatically get a gauge and understanding that the sellers are still dominant in this case. They're still holding grounds. So you can't switch suddenly into a buy mode thinking that looks like the buyers just came by looking at some strong green candles like there, right there. Okay, so this keeps you really, really in ground and in tuned with the sell side. So the sell further continues to make lower low, lower high, and it continues to drop further. So when it makes a lower low, lower high, it breaches this area here. Notice how the market continues to stay below that. Once it makes another lower low, this is a minor breach here. The market continues to stay below that. So all of this stuff that happens should not make you think, looks like the buyers are coming in. No, they're still maintaining grounds. The sellers still have the ball in their hand. It's still their turn. Okay, so your mind at that moment is still thinking sell, 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 sell. Okay, and then as the market continues to breach, the sellers stay in control here. Notice how so much time has passed by, but the sellers continue to dominate in here. So we're only thinking in terms of sell. Now there are more variations to this. Okay, we're going to get into that in the other lessons, but I want you to follow the buyers and sellers this way. This helps you keep a sharp eye on what the market is going to do, how they're going to turn, and at what stage should you start thinking for a turn, and at what stage should you start thinking, no, this thing is going to resume and I'm going to keep going with the resumption. Okay, so let's go to some practice examples. Okay, so here's a practice video for the sellers staying in control. Now, This is the Euro USD on the 60-minute time frame, and let's take a look at how this thing pans out. So remember from the previous video that we saw that for the sellers to maintain control, we must first understand when the buyers ended. Okay, so as we can see from the left of our screen, the buyers were coming up really strong here. They maintained their grounds, they went higher, made higher highs, higher lows, until they stopped making higher highs and the rollover happened. So when they stopped making their higher highs and the rollover happened, notice the breach point is here. If that's the breach point, you mark that area and be like, okay, that's the breach point. Below here is seller's territory. It's all seller's area. So seeing sudden green bars come in like this does not mean the buyers have the ball. It means the sellers are still maintaining grounds. Okay, so the seller's still maintaining grounds here again and again and again and again. And at this point, it may seem like, whoa, he stopped making lower lows and it looks like the buyers are coming because he's breaching above this line. But notice he never crosses his previous high. He never crosses the previous high, which means the ground still maintains as looks like the seller still has the ball in his hand. Okay, the market keeps holding until it drops further down. Now, when it drops further down, it breaches the next spot, which is, all of this area here, right? And it maintains grounds below it. Now, in this grounds below it, as I'm going to move the charts further, notice how it looks like, isn't that a little higher high, higher high, higher low? Yeah. But what happened to this overall sequence? If you're aware of this overall sequence, you have a very clear understanding that the sellers still are in control. So anyone going in for the buys has to be very quickly exiting their positions because the sellers are going to be coming back. Okay? So when you see the information like this, you're like, okay, the sellers still have control. The buyers are making their moves. They get up to here, and then the buyers start crashing down again. And the sellers keep maintaining their grounds. Okay? Once the breach happens yet once again, you can put your line back down to here. And it's a bit confusing now. Well, did he breach it or not? Because he looked like he just got back. But whether he breached it or not, this is his recent high. Okay? As long as it doesn't breach that, the sellers are still in control. Okay? So let's see that further in. Okay? He's challenging that area. And now the breach has happened. And that's when the seller switches to the buy mode. Okay? So this is a very general concept of buyers and sellers. You need to keep track of this because people generally, what happens is as they're looking at this sell zone, that this is seller territory, they get caught up in the thing that shows up on the right side of their screen and they're like, that must be a buy. That must be a buy. Look at it. It just keeps going. For the last 24 hours, it's been going up. It must be a buy. Okay? Or the markets are turning around. And then when this big green candle happens, everyone eventually jumps in on the buy, out of impulse. And once that impulse happens, the sellers start dominating again. So we'll get into techniques of how to deal with impulses as well in our future lessons. But this week, we just want to complete master the difference between the buyers and sellers. So let's go on to the next example of sellers. Okay, so in this practice lesson, we're going to be looking at Aussie USD on the daily chart. So I want to show you that even in a different time frame, the concepts for buyers and sellers still hold true. So we're going to continue with the seller concept, and I'm going to show you this on the Aussie USD on the daily here. So I picked a random date from going further back. This is 2014, but same concepts. If we're focusing on the sellers, follow the buyers first and see when their sequence ends. So a buying sequence is usually a higher high, higher low, higher high, higher low, higher high, higher low, and then no higher high. No lower low, attempt for an higher high, no lower low, reattempt, crash. So basically when it breached higher from here, it never went higher, but it never went lower either. So it's still the buyer's control until this moment here when it rolls over and it's like, okay, it's the sellers. Now you might be thinking like, Naveen, if I see this as the sellers are here and I'm always thinking about selling over here, can I not know when to sell over here? And we're going to get into all that. As you go through the entire course, everything is going to plug into each other. And you'll see how that all correlates. But what we're going to teach you is mastery. One piece at a time. We're going to teach you mastery. And mastery does not come just by knowing something. Mastery comes by using the same thing again and again and again. Watching practice after practice after practice. Understanding it over and over again. So we're going to build mastery right now. Okay? So we're going to focus on just sellers. So as this point, the sellers dominates. Now, I'm going to move the chart slowly, but I want you to say it out loud or think in your mind what's going to happen next and who's in control. Okay, so follow along. So as the ball crashes down from here, the market rolls over, this is the turning point. This low was breached, which is now, this low got breached, which is now the new spot of, well, as long as it's below that, the sellers have control. Okay, so let's take the market further. Buyers start to come in. They breach further down lower. Okay, so let's mark that area. Now, would you still say the sellers are in control, or is that a faker and the buyers are back? Okay, so keep thinking what's going on in your mind. Let's move it further and further and further. Now, if you were thinking sellers, the answer was correct. What's going to happen at this stage? Many people will switch to the buy side. Many people will switch to the buy side. And obviously you know how their buy turns up now. Okay? Simple concept, but misled by many people, misread by many people, I'm sorry. And we're gonna make sure this doesn't happen to you. We're gonna make sure that everything is perfect on your end when it comes to understanding the flow. So the flow continues down and the sellers continue to dominate. We're gonna follow it down and follow it and follow it and follow it. We get down to here and we can say that, okay, he's starting to pause here. He did breach below here, which was the new spot. As long as he's below this zone, then the sellers still have the ball, right? So in this area here, would you say the sellers are turning? Okay. Now, if your eye is going on very minute places, like, oh no, well, that looks like it went lower, and then that looks like it's a higher high. It must be dead. Sellers must be dead. It must be the buyers. No. I want you to focus on your eye when it was looking at this whole sequence. And then your eye suddenly focusing on the detail. You want to avoid doing that. This happens to many of my students. Okay, you start off with a perfect view of the market, but then you end up with a detailed view of things, and the detailed view of things shows you things in a much different way. Okay, because that's what the markets are doing right now. Most people come home from their works or something like that, and they sit in front of their computers and they want action now. So action now can be very dangerous if you don't understand the flow. So let's continue to move on. The sellers continue to dominate. So once they dominate, we are going to mark the next spot, which is here. As long as it's below that, sellers are still in control. Let's keep going. They're retracing again. Here comes the buyers temporarily. And so we got a spot here. Now, would we say the sellers broke their area and are back up? Or are we still using this area? Okay, that's a question to ask yourself. Did you actually make a lower low to count that as a new spot? Or was the market just going sideways this whole time? Okay, if you're saying sideways, the answer is correct. It did not make a lower low. It's still hovering around these prices. Don't be very strict on prices like, oh, that price is exactly there, but then he went 5 pips lower. Don't do that, because each broker will give you different prices and prices will vary. Okay, so keep that in mind. Don't be so strict on price. If it's thereabouts, you're good. Okay, so let's move it forward. Buyers were pushing up here, sellers come back here, and they're hovering around the same spot again. They're reattempting the buys. Look how high it gets. Everyone in the market's excited for the buys. Did we breach this? No. Reattempt for higher highs? This is its higher high sequence here. Did we breach it? No. And we got your sellers coming back in, hovering around the same bottom line again, and here comes the sellers again. Notice how long it took. This took from February to July. But all of this was in seller's territory. Okay? Hope this makes sense and it solidifies in you that, okay, who's got the ball? Who's got the ball? Who is still maintaining their grounds? Okay? That's the word we like to use quite a bit with my students. Maintaining grounds. The seller still has control. Okay? So on to the next example. Okay, in this practice video, we're going to be looking at pound New Zealand on the daily charts here. Now, this is in 2015 sometimes. Now, again, focusing on the sellers. Let's not lose track of that, right? We want to master the sellers. So, to master the sellers, we're going to wait till the buyers end. The buyers are making higher high sequences, higher low sequences, higher high sequences, higher low sequences, until it reaches up to here where there's no higher highs. Notice price went all the way up to here. No higher highs after that. And the rollover starts to happen. Okay? Once the rollover starts to happen, it doesn't make any higher highs. So the sellers start to dominate. Now, the turn happens when they breach this area here. When there was no higher highs. So this is a watching point. To see, are they going to breach, go higher than this, and even challenge the high. Okay? So the sellers are still in control. They go down, they breach their previous area, which is here, which marks the next spot. They go lower, they maintain grounds below that, so the sellers still have control. Doesn't matter how strong the green candles come in, it is in seller's territory. And as they come down, they never make a lower low, go sideways, sideways, and then boom, breach again. Once they breach again, here's the breach levels, okay? You're looking at this coming down, down. Now, don't mistake this for support and resistance. These are very, very different from support and resistance. We're going with who's in control because support and resistance says price from here needs to turn around, right? But if you're looking at who's in control, price can come all the way up to here and still turn around and go down because the seller who initiated it, his recent low is here. His lower high is here, right? So the sellers keep control, and then look at this. Would you say that's a lower low? Okay, I'm going to put a line right there. Okay. Notice how in the previous video we were talking about, you know, the slight variation. Like, oh, here we go. Even if I put it like that, for those of you who would like to include tails. Is that a lower low yet? Is that a breach? Are we making brand new lows? Now this can be scary. Because now that it's coming all the way up, if we mark this as a lower low, then we might start thinking that this must be the recent high. Then this becomes in the watch list like, whoa, he's getting up quite high. He's quite powerful. Keep moving. Whoa, he's pushing up higher. Whoa, he's pushing up even higher. So, is it buyers? Or is this low fake? Now this can be a dilemma, and this can mean a big difference between profit and loss. Just knowing this little information. Is that a lower low, and are these challenging the highs and actually breaking the highs? Or is the previous break here, nothing went lower and it's just maintaining grounds and it's trying to challenge this fella up here, this recent lower high. He gets up to challenge it, comes right back down, and starts to breach. Now, is this a breach, or is this still the same thing? Does the line still maintain here, or have we gone lower? Keep watching. Okay. The breach has happened. Now, would you agree most people say that's the breach? But even if the breach did not happen up until that point, what's your mind thinking at this stage? Well, it's still a sell. If it is this purple line, it's still in the seller's zone. They still have the ball. Okay? Alright, so you made it from the first week and now you're here on to the second week. Now we're going to be discussing a concept called fading, or you're basically watching the momentum, or if you want to call it the strength You're trying to see when the strength is dying of a movement. Okay, so amongst many other things, this is one of my favorite topics because I just love to see how one side of the market just, gives up. So using the knowledge you've acquired from the previous week on buyers and sellers, now we're gonna step up your game a little bit more. Okay, now I hope you've practiced and practiced and practiced from the last information. We're gonna do the same here. We're gonna practice and practice and practice with this next additional piece. Okay, so let's get straight into it. Now this one, what we're talking about is gauging momentum, right? So we're looking at Euro USD on a daily chart. This can be applied to any time frame if that's a concern. Now, what I want you to do is first, let's say we're looking at this as a sell market. Okay, the market is coming down as a sell. You can see that downtrend coming in, lower lows, lower highs, lower lows, lower highs, blah, 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 blah. Okay, once we create a lower low from here, you at this point now know that is seller's territory, right? Yes or no? Right. Now, if that's seller territory, let me mark this spot as boom. That's the area it had to break through, and the secondary piece, as we discussed, is the part where it starts from. Okay, these are the two spots we need to watch very carefully. He can break above the purple line, but it doesn't mean it turns into a buy, right? So keeping that in mind, we're watching how to gauge momentum. Okay, so we're watching this as in the seller's territory, and as the buyers start to step in, we can see, yeah, the buyers have some momentum, but they're in the seller's zone. Now, we're trying to add in that extra phase of, okay, but what does that mean for me? How can I trade using that information, right? Now watch very carefully. Now the market keeps rising and rising and rising, and then it crashes. That means it's still in seller's territory. He never goes above. He challenges that circle, but it never goes above. Goes up again, challenges, drops. Goes up again, challenges, tries to break it, but comes right back down. That means that's a faker. With all the sequences now, I want you to watch how to fade on momentum. Okay, so let's start from here. Okay, let's say the buyers are kicking in, and as they're going long, notice the distance from here to here. Okay, he goes a bit, and then he retraces. Now think in your mind or say it out loud as I ask you guys this question. How much percentage of a retracement is that? Okay, some of you might say 40, some of you guys might say 50% retracement. Okay, good. A 50% retracement is not a 100% retracement. A 50% retracement means there's still movement. After the 50% retracement, they push harder. As they push harder, it retraces. How much? 10, 15, 20%? Now, compare that to the first push. He got stronger. The momentum got stronger. There's more power to this fellow. The next push, he makes it slightly higher. Does he go higher? Not necessarily. He just comes right back down. And how much is that retracement? 80%. 80%. If this was the move that he started from down here and he blasted up there and he came down to here, that's 80%. Which means the strength of his speed is slowing down. Okay? This concept I like to share with some of my elite members is basically imagine as if you're that person running from here and there's a rubber band attached to your stomach. You can run as far as you can, and then the rubber band pulls you back when you're tired. And then you run even more, like right here, but anyone who's watching you and he's understanding there's a rubber band around you, can he say you have more strength when he sees that? Absolutely, right? You're like, oh, he went way further than last time when he rested. Look at how much he rested. Oh, just a tiny bit. But then he tried to push further again. What happened? He rested a lot. He couldn't even go further, much really further, right? He barely beat his own record from his last time. And then he rested a lot. He's like, whoa, looks like he's approaching his limits now. Okay, this is how you gauge momentum in your brain. It's like, something's wrong. Something is wrong. He pushes up once again and still no higher high because he comes crashing right back down. He's losing momentum. Now, here we go. Here is the difficult part. Stage one, never forget. you're in the seller's territory. Stage 2, don't forget your momentum is dying. Okay? Your momentum is dying in the seller's territory. The buyers are fading, which means the rubber band man buying is slowly coming to its death. Now, as it's going up higher and higher, and then it comes crashing down, don't forget, just like we did seller's territory, let's do a miniature buyer's territory. Let's do a miniature buyer's territory. So he goes long, pulls back, holds a bit, goes long, breaches the spot. I'm going to put a dotted line for the breach. Breaches that spot. Okay? Once he breaches that spot, he goes up to this high, but he never goes higher. So we're not interested in moving the spot up here because this was the last spot. Okay? So if that's the last spot, he breaches that spot, he gets up to here, never goes any higher, and he comes crashing down. But he comes crashing down to where? Still in that mini buyer's territory. Because we're watching this and this little bitty circle of this guy. Right? That is all still in buyer's territory. Now, miniature buyer's territory in a big seller's territory. Good, good. Keep that in mind. Now, up until this point, what can you tell me about this rubber band man? Once he started dropping right here. You're going to be like, oh my God, this guy is nuts. He's out of balance. He's losing control, right? Well, what now? Well, what now? You watch his final run and seeing, okay, he's going to attempt one more time because he's maintaining grounds in his buyer's territory. Okay? Where he got fuel last time from. Maybe he drinks a Gatorade or something over there every time. Some of you might call it supply and demand. Some of you might call it support resistance. You think of it as an individual running. Don't confuse this with terminology and jargon that you don't understand. Think of a man running with a rubber band around his waist. So this is the spot where he gets momentum. He gets the momentum again and he does it one more time. And notice yet again around this area, he goes up, he rests 50%. Goes up, no higher high, rest 80%. Goes up, no higher high, he rests 100%. A complete failure even on his last attempt here. That is the moment when you can say, let's resume with the sell side. Let's resume with what we saw here. Let's resume with the miniature death as well, because all things point to the sell side. Okay? Now, this happens again. As it comes down, he comes back to the same spot where he bounces up from. Now, some of you might even think ahead, right? Because our brains are wired like that. Oh man, like, yeah, but that's that. Calm down. Just calm down. We're going to go through everything step by step. Keep an open mind, and I will walk you through the correct way to do things without jargoning your mind with all this excessive stuff that comes on the internet for Forex trading. And that's the reason why many people fail. Okay? So stay with me. Stay with me. I'm trying to be here with you as much as possible. I'm trying to help you out here. So in this whole process, as he comes down, the market yet once again starts to push north. Same situation happens. You read that rubber band man. He pushes north, rebounds 80%, pushes north even further, but rebounds 50%. But look at the push north here. Look at this push north. Looks like a lot smoother. Okay, but it took much longer. Okay, then he pushes north again, but then he comes crashing down. It's like he got a sudden boost of energy, but look at the speed he came crashing. Steroids? Maybe. Maybe. Think like that. It's okay to think like that. What is that? It's a fake. Well, what happened? What happened to his energy? He just came crashing back down. Now, he's above his SNR, support resistance, or he's above the area where he got that little steroid pill or his Gatorade. He pushes again, fails. He's still in that miniature buyer's territory right there. Right? You can see miniature buyer's territory right there. And as he goes up again, his second time, like he did over here, right? His second turn when he starts to fight. He goes up again, slows down, goes up again, no higher high, comes crashing down. Yet once again, you're seeing, could this be the end of his reign? Now, This one comes with a dilemma. Earlier you had your line down here, now you have your line up here as a miniature guy. Okay, so the first attempt for a sell is here. And as it comes down, you see the sell is not performing. The sell goes back up north. The buyers reattempt. But you know this is still seller's territory. You know every time this buyer gets up here, he gets knocked down. You know we're in an overall downtrend. You know that every buyer that comes up in this area gets faded. You use this information to your advantage and be like, he's still got momentum. Wait for it. Wait for it. He goes up. One last try, comes crashing down, and here we go. Now we're coming back to our original mini line here, which was this original mini SNR, right? Which is the mini buyers area. That can be your target. That can be your target. But we're going to watch it carefully and see how well this sell performs. Because around this area, we want to see, can he break it? Do the same thing as a rubber band man now coming to the sell side. Watch the momentum on the sell side. You can do it here too. Look at this. Look at the sell side. Look at the retracement. Look at the sell side. Not very healthy. Look at the retracement. Look at the sell side. Very strong, but fake. Comes right back. Do the same on this side. Watch the sell side, rubber band man. See how far he gets there. Strong, healthy. Strong, healthy. Retracements. Now look at the retracements. The pushes get weaker and the pullbacks get deeper. We're coming to a halt because now this big circle that we see here, his whole bottom area is here. This could be the bottom of his range. So you caught the major move here. You caught some minor moves here. Okay, some minor profit and loss here and some major profit and loss here, as long as you're able to withstand this. So the reason why I'm going to show you this with more and more examples is I want you to understand that at some points there is going to be a final push from that guy. So don't be stingy on your stop losses. Okay, don't be so generous either. Okay, with practice you will understand how much of a stop loss do you need. So there a common question is, where do I put my stop loss? Where do I put my take profit? We're going to get into that all piece by piece, slowly. I want you guys to master this fading first. Okay? Fading the momentum or gauging the momentum. Okay? And as it comes down towards the end, his reign comes to a halt. Okay? So on to the next example. Okay, so now in this video, let's do some buying examples, right? So let's do some basically gauging the momentum to fade out the sellers to understand when the buys will resume. Okay, so let's take a look at this carefully and see, okay, how can we apply this on the buyer side? So to do the buyer side, we must first see when the sellers end, and we can see from here the sellers were in a downtrend right here, right? As they were into a downtrend with lower lows, lower highs, and every step of the way they kept holding. Let me use this line. They kept holding, then they went lower, held there, and then they came back. So it's like, okay, that's the low point and that's the circle. That's the circle, that's the guy who started it all. So even if you break above, doesn't mean it's a buyer yet, but once he challenges and breaks through that, then yeah, now that's officially a buyer. So we're gonna bring this higher. We're gonna bring this higher and be like, okay, that's where the breach happened, and the guy who started it all is this fellow's down here. Okay, these are the guys who started this whole momentum. Okay, now that he's getting all the way up to here, notice no seller comes in. It's just a buyer pausing, buyer going up. Now as he gets up to here, here's where the sellers come in, and we want to start noticing the seller's rubber band man, right? So the seller's coming in, he rests 80%. Okay, he's already starting slow, but then he picks up momentum. Before he had red, green, red, but now he got three reds. But on the third one, look at that wick. He's starting to get some pressure coming in. It's like, okay, so he's selling, but then he's got pressure. And it looks like, what is that, 100% retracement? Okay, let's understand this in a seller's perspective, right? We do that miniature, whose territory is he in, buyers or sellers? So if we held here and then he break through the spot, That's his breakout area. That's the area where he broke through. And who's responsible for that sell? This fella. As long as we don't go above him, he's in the seller's territory. So he went below and he retraced quite a bit. Then he goes below again, no lower low, but he retraces 50%. Then he goes bit again, no lower low. He retraces a little bit more. Then he goes bit more and he gets a snap back completely. He's like, okay, this guy's dead. He's completely out of the game because he keeps getting snapped back. Now notice up until this point, it's very difficult to gauge like when is it the right moment for us to understand that can he still have power. It's until he is still in seller's territory. But notice once he breaches onto the other side of the seller's territory, it's game on, baby. It's game on. Because now we're going with the original buy status, right? The big buyer here. We're going with the miniature. The sellers have faded out and the buyers are back. Okay, so we're resuming the upward market. Now, there is a bit of caution there because of this big knockdown. But remember, this big knockdown, whose territory are we in? Buyer's territory. And if this is the zone where they breached, who's responsible? This guy. Would you know where to put your stop losses? Okay. Practice this again and again and again until you get very, very good at this. Okay. This can also help you in terms of how long you need to hold the trade for. Go with the buyer rubber band man and be like, okay, he's still got momentum, he's still got power, let's keep going. Okay? And we'll get into more details of stuff like that later. But we're going to practice this over and over and over and over and over again. Okay? Let's go on to the next example of the buy. Okay? We're going to keep it in the same video. So here comes the buyers again. They breached through this entire area because they never went higher high this whole time until they finally broke it. So when they broke it, that's the breach when they made a higher high. Who's responsible? Like we said, it's this guy. Now we're looking at it in a larger scale. In a larger scale. We're not looking at that little teeny weeny one. We're looking at it in a larger scale because this is where it came from. Okay? So, big move up. We're starting to get sellers coming in because the buyers are fading and here comes the sellers. As long as we know this is buyer's territory, the market is oblivious that it's buyer's territory. Everyone is looking at it as a sell. That's fine. That's opportunity for you. Okay? With all due respect to all those people who are selling, that's not our concern. We have to focus on what we need to do, right? So as the sellers keep coming in, here's the pullback to it. Okay, 60% pullback. We're like, already weak. Then he pushes more. He gets a little bit further, but he pulls back 70, 80%. We're like, it looks like he's about to die. He's not dead yet. He's about to die. Okay? Then he pushes this much. We're like, okay, he's not dying at all. This guy has just picked up some sort of steroids or something. Okay? He's got power. Let's do the miniature sell zone. Okay? Here's the breach. Who's responsible for this mess? This fella. Okay? Now, as we get the markets lower and lower and lower, he comes down to here, snaps back 30%, 40%, comes down again, no lower lows, snaps up. Now notice we're in this zone now. Seller's territory still. But buyers are coming in hot. Okay, now we got a little dilemma here. Okay, this we're going to go into next week, which is basically going to be called money spots. These are the money spots where people are confused. Is it a buy? Is it a sell? If you can solve that confusion, the money is in your pocket. Because that's where the blast happens. Okay, we'll go into money spot next week. A little piece by piece, right? Piece by piece. I can already feel you guys are raring to go. You're getting momentum. That's good. That's good. And I want you guys to let me know in the comments below of how are you doing in this whole process. Go and try them out. And then you have a whole week to practice this. And let me know in the comments below, like, how are you doing? Okay, I'll have my team, my moderators, I'll come out there myself and I'll look into your questions and answer them. But I want to see your progress. Tell me how you're doing. Are you able to see the changes now? are you able to see the light at the end of the tunnel? Is your trading turning around? Okay, so when we see this area, they're like, okay, I get it that we made a higher high, support equals resistance is broken, it's the buyer's area. No, it's not. We're still in the seller's market, mini seller's market, overall buyer's market. Okay? Very confusing state for many people, because at this stage, what happens? It can smack down and make new lower lows. So at this stage, he holds grounds and then he breaches higher. Now the breach happens here, and who's responsible? This fella. He's responsible. As long as we're above this guy, we are now turning into the buyer's market. Now, remember this other guy? This miniature sell zone? We're up challenging him now. Now that we're up challenging him and we've turned into a buyer's area, this fading is very critical to us. It's very, very critical to us. In this fade, we will watch the sellers like a hawk. Every time they try for sells and every time they rest, every time they get knocked back, it's telling you more and more signs of prepare, prepare, prepare. Okay? The stop losses can't be just below this line. Remember, who started it all? This guy. Your stop losses has to be down here. Okay? So don't underestimate the power of the guy who started it, because the markets can come back to that guy. Okay? If you remember in the previous videos, every time it comes, knocks back down, that moment where he started it last time, it's just like he got that steroid again. Remember that was happening in the last video? He just keeps getting that momentum back, like right here. Imagine this guy is running really hard over here, but when he gets smacked down, he gets really hard again. It's like, whoa, that same... I think that dealer is just standing right there with the steroids, right? Like, he's like, come on, boy. You know, if you ever need me, come back here. So it's like that, right? So you can actually sense it like that. Now, again, this can be very similar to some of you guys' background knowledge of whether supply and demand or support resistance or buyers and sellers or whatever it may be. But simplify it in your mind. Simplify it in how you're going to see it. Okay? So, in this particular case, your buys have to activate in here. As you see, the sell coming in, retracement 50%. Sell comes in, no lower low, retracement 115%, 200%. That's the retracement. Very big right there. All of this above this purple line, all of this challenging this guy, all of this in a buyer's zone, all of this in an overall buyer's zone. It doesn't get any better. And as he tries to make new lower lows and he starts to get eaten up, it's like game on. It's game time. And then you execute your buy trades in here. Okay? All right, so on to the next example for some more buy examples. So we did some sells, let's do some more buys. Okay, so in this video, we're going to be looking at a buy example from the Aussie CAD on a 4-hour chart. Okay, so let's start from the beginning, where to be a buyer, we need to see the sellers die out. So we have the downtrend coming here. We got a lower low, lower high, lower low, lower high, holds, 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 lower low, holds, holds, boom. So let's mark the last territory. We had this area where it breached below, snapped back in, but then it came back down and held below for a while. So it's like, okay, that's a lower low. Who's responsible for this? This fella. Okay, so as long as it's below this circle, it's still seller's territory, but then it gets breached. It comes higher. Now, once the breach happens, the line shifts to here. It breached above this guy, and who started all this? This guy, right? These are the people responsible. So here's the major flow. Major flow is uptrend here. And we're gonna watch and see on how this thing turns into a uptrend and how we can gauge and see how we can buy this. Now, before even trying to get consumed by looking into the future, let's take this step by step here. Okay, so here there comes in the buy. Here comes a pullback, a buy. Okay, here is a bit of the seller showing momentum. Okay, notice how high he gets. This high, just like the left one. As the sellers come in, sellers come from here to here. Pullback. How much percentage would you say that's a pullback? very minute. Then he goes higher and pull back and pull back and pull back and pull back. It's like, wait, it's still the buyers. But then you start to notice the buyers never make a higher high. This whole process, no higher high, no higher high, no higher high. You can look at this like, okay, here comes the buyer's attempt again. But then he gets completely crushed by the seller. Okay, so it's the seller's turn. It's the seller's turn in the buyer's territory. Okay, don't forget this guy. It's the seller's turn in the buyer's territory. The buyer reattempts up here, pulls back, seller dominates again. Coming down now, we're starting to notice that, this buyer and seller keep fighting in this area, which is like a range. As the seller comes down again and he fights his way through, pushes, small retrace, pushes, small retrace, pushes, big retrace. It's like, wait a minute, this guy never seems to go below this area. Again and again and again. Like, what's about this price that keeps holding? Now notice this is all still above in the buyer's area as well, regardless. So it's like, we know it's in a buy zone, but at the same time, we're trying to understand, like, well, what are they trying to do? Let's find out where the thing starts to fade. So I'm going to remove these purple lines, and we're going to use the purple line, the dotted lines as point of reference for the sellers being in control, the mini sellers. So as the seller comes in, as when we see this buyers get dominated into the sell market, we're going to put the line here. This is where the first domination happens here. That's the breach. Once that breach happens, who's responsible? This guy. Notice that this is a little bit more tougher, but just hang in there with me. Watch it as many times as you need it. This video. Breaches, the guy's responsible. When he comes right back up to here, does that mean it's the buyers? No. It's still in seller's territory. Mini seller's territory. As the seller comes back down, no lower low, still seller's territory. Expand this out. As it goes down lower, it's like, aha, he's lower now. Holds just a bit, comes right back in, still seller's territory. Still seller's territory. Until you reach a part where the market starts to turn and snap here, where the last seller's territory, which would be this one here, doesn't hold anymore. Okay, so I'm going to keep the line back up there. Markets keeps coming up. It's creating the area which we call the money spot. Okay, it's creating the area which we call the money spot. We're going to discuss this in the upcoming weeks. So it's creating the money spot area, all in this buyer's zone. You're starting to get hints and clues of sellers fading. Hints and clues of momentum of the buyers coming back. Hints and clues of the bottom of this mini range keeps holding and holding and holding. But it's still within a miniature seller zone. So it's like, well, what do we do? At what point do we make our decision? As we see these buyers dominate and dominate and dominate and dominate, and the sellers kick in. Seller 1 pulls back. Seller 2, no lower low, complete turnaround, dead. Now at this point is the area where most people will be so scared to pull the trigger, assuming, hey man, that's the top of the range. How can I buy over there? How can I hit the buy over there? That's not possible. That's too dangerous. Right? It's always going to be dangerous. Remind yourself this question. You know, how can I hit the buy up there? It's too dangerous. That's support equals resistance. Well, it can't always stay in support equals resistance. When the timing is right, it's going to break through. So, either you anticipate or you join the market by participating and hitting the buy up here once the trade is actually leaving. And you all know how that plays out, right? We've seen so many people. I've used to be there where I used to just like, oh, it's going up, let me buy it now. And don't I want to be smarter than the market and not chase it every time? Okay, so there's a terminology that all the pros use in the market. If you chase, you die. If you chase, you die. Okay, it's a common quote I've been hearing again and again. I first heard it from Kunal Desai. He's a trader from, I believe, Wall Street Bulls, or Bulls on Wall Street, I believe. So it's true. You know, you chase, you die. You chase, you die. You don't want to do that. You don't want to do that. So looking at this whole concept, buyers and buyers. So the first time the sellers came in was here. Okay, so let's recap this. The seller came in for the first time here, very, very strong. But then a major retracement. What does that tell you about the major retracement? Because we're discussing gauging the momentum. Major retracement, 100% retracement. You're like, this rubber band man is done. He's finished. And then he inches and 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 snaps right back. He tries to beat his record. He can't. He gets up to this area and then boom, very hard, but just like that, boom, very hard back. These are all clues that he just can't make it. And this all clue began not from here, not from there, not from there, not from down here, but from here. Notice how when most people come into trade, they don't realize that spot because they're like, that's the past. Who cares about the past? Let me just focus on what the current chart shows me. Let me just focus on this area here because that's where I'm going to make the money for my Ferrari, right? Like, they don't see that there's information prior that has a big difference. No, sorry. Right? So we need to know that information because that information leads up to this whole area, knowing that we're in a buyer's territory, knowing that the sellers are fading. And as the sellers fade, you activate your buys anywhere in this area. But notice where the fade happens. Where did the transition happen between sellers to where the buyers come to challenge it? It's up in this zone where the buyers come back to challenge these guys, right? If the buyers are coming up to challenge these guys, who's responsible? It's going to be one of these guys down here. So you want to be placing your stop losses below that guy, not below this guy or this guy. That's too advanced. We can, if you want to deal with stuff like that, you know, we're going to have some more courses that deal with advanced entries, advanced trading, and going for the higher risk rewards, you know, truly, you know, making the difference as a trader. So we can go into that in a much later course or anything like that. But for now, let's master this. And mastery comes with practice. Okay, so hope this one helps. We're gonna do a quick recap one more time. So sellers here, because this was a little bit more difficult, we're gonna recap it one more time. Okay, sellers here coming in, coming in, coming in, coming in, coming in until the breach happens. The breach happens. We're now into the buy side. The buy side, who's responsible? This fella is responsible for the buy side. Now that he's responsible, we know this is a overall buyer's territory. Even though from a glance, it's like, if I step back from my screen, it's like, hey man, isn't that a range? Yeah, that looks like a range, doesn't it? But you know what's the flow. You get an idea. Okay, so when you're watching this and you're like, as long as it stays above this, where the flow is north. Okay, so it goes up, and as the sellers start showing their colors, the first sign the sellers show their colors is when the buyer dies, which is, here's the first moment where the buyer dies, here. That's where the buyer dies. Buyer, pullback, 15% or 30%. Big buyer, 15% pullback. Tries to push higher, 130%, 150% pullback. Buyer's dead. Now show me if the buyer is dead. Show me the seller's momentum. So if the buyer is dead, which means no higher high from this state, right? Here comes the buyer's last attempt. He's trying to go up, dies, trying to go up, dies, trying to go up, no higher high at any point of the way, and then collapses. Now the collapse stops here. So now it's the seller's turn, right? Because he collapsed, it's the seller's market. Here's the seller's market. Here's the first moment. As soon as the seller comes in, immediately the buyers come in. Whoa, that's 100% retracement. I know it's a seller's market, but that's a big retracement. As that retracement comes up, seller reactivates, comes down, pulls back a little bit, goes down again here, pulls back 100%, doesn't go higher, continues to crash, pulls back a little bit, continues to crash, very slow, very weak. It's not like it used to in 2 candles. Now it's doing it in 10, 15 candles. Very slow, very weak. This is a 4-hour chart. That's a lot of time. Very slow, very weak. And then snap down. Whoa, whoa, whoa. Is the sellers here? Nope. False alert. Immediately jumps right back up. Sign number 1. Hey man, sellers are dead. Okay? It goes all the way up to challenge that spot again where there's no higher highs again. Seller kicks right back in but jumps right back. Now, first sign of a higher low. This is a sign of buyers. When you get a higher low sequence that shows up. Okay? So we started off from knowing the territory. Then we went into knowing how we're going to fade this. And we watched all the data from here to here to understand when the moment is right. So it can't just be the last few candles. So you have to understand that. Okay? All right, so hope this example was useful. Let's prepare you for the next lesson. So I want you to practice and practice and practice and practice and practice and practice and practice until you master it. And then next week, we're going to go into even deeper and we're going to unfold even more mysteries for you. Okay? So keep practicing and let me know how you do in the comments below. Okay, so we're going to do a sell example on this one. This is Aussie New Zealand for the daily. So we're going to continue to gauge the momentum with that understanding. So to do a sell, again, we're going to do first looking at the buyers to understand where the buyers faded before we can understand the sells, right? So first let's do the areas like we learned last week, right? For buyers and sellers. So here we go. We have a higher high, higher low sequence, and then no higher high here. So it's still the same spot. I'm going to do it from here so you guys can see it. So this is where it broke. He went higher, went lower, never went higher, went lower, and then he went higher. So the line shifts to here. Okay, that's the new spot. And the starting point for this is here. Okay, notice that this is still within this zone. So the starting point is here, and that's the new higher high. After that, he never made a higher high ever. He just kept going inside that area, right? So once that kept happening again and again and again and again, finally the market comes down crashing here, and we're like, okay, he's still in buyer's area, and then he crashes below. Okay, once he crashes below, we're like, okay, it's still not sellers yet. It's still buyer's territory until he can break this guy, right? Now that he comes down, breaks below, and then he tries to challenge it, and he starts going through it. We're like, well, is that a sell? Is that a buy? Is that a buyer's territory? Is that a seller's territory? Well, look at the momentum. Look at the speed of the sellers coming down in this area, right? So this is the turning point of the market. Now, the only thing that's going to confirm it is if we fly right back up. If we fly right back up, that means we're just back into the range, and this low just never happened. It was just a faker. But, so we're watching this carefully, and this is where fading comes useful. Watch this as this comes down to challenge this guy. Watch as the buyers reattempt. So, rubber band man. Here goes the buyer. Boom. Very hard to recent SNR. Rest, tiny, okay, 15%, 20%. Pushes up more. This time takes longer to push. Takes 1, 2, 3, 4, 5, 6 candles, right? Compared to before, just few candles and he's up there. 6 candles to push a little bit further. Pulls back 20%, okay, very minor. Then he barely pushes up more. It takes him 4 candles to make just a slight higher high, but then he rests almost 100%. That's 90% rest. He pushes up one more time, no higher high again. If I can put a line right here so you can see this. No higher high again, and then he comes crashing down right there. So it's like, okay, so if I were to understand all this, this buy never held up here, right? Because it's buy, hold, buy, hold, buy, and then the crash starts to happen. As the crash starts to happen, and then he doesn't make a higher high but crashes once again, which is not even 100% retracement, it's 200% retracement, that tells you we're probably stepping into the seller's territory. Because notice where this area is. It's back around that purple line, and it's showing you the buyers are dead. Buyers are dead, the rubber band man is exhausted, and we are understanding this area as, is this area still buyer's zone or not? Okay, so looking at how strong it's coming down, we can start to gauge that, okay, looks like the momentum is very, very powerful. And then the sell starts to take place. It starts to take over. Now, the sell, look how far it goes down to here. Why? This is the same spot as earlier to know, is this seller's area or is it a buyer's area? The buyer's reattempt. Up, big retracement. Up, small retracement. Okay, no higher high. Doesn't mean it's dead yet. Up, no higher high. It's a faker. And he comes right back down. It's like, that's it. He's done for it. Because he couldn't even make it up to there. He's only reacting down from this area is because people are still looking at this as a buyer zone. The professionals are still looking at this as a buyer zone. Hence, the market gets to move. The average professional individual who calls himself a professional cannot move the market. Okay? And with all due respect to that guy, let him push. Let him do whatever he can. That's good. You know, the more you try, the more you learn. The more you learn, the more you get better. So that's okay. So, but when you see all these statistics of what's going on, you try to understand and get the story right, you start to get an idea that he keeps failing. He keeps failing. The momentum keeps dying out. If it's dying out the second time, notice what's also happening. We're getting lower and lower and lower. We're fighting this thing. Okay? Now your profit scale is shrinking. But at the same time, it's trying to show you that maybe we can break through. Let's move it forward. Right there again, it bounces back. Right there again, it bounces back. It's almost like if that was his 100% or 200% retracement, last try, once again, bounce off this area. So if you're in this trade, your exits are already there. Or if you're doing it with multiple positions, half your positions out, the other positions at break even, blah, blah, blah. The second attempt happens. Goes strong up, pulls back minor, goes strong up, no higher high, pulls back 100%. Push forward, holding, and it goes north. So, two opportunities only in this one. We're looking at an opportunity here. We're looking at an opportunity here. But do you notice when you did this fading aspect, you were able to gauge where you should be getting in? But without having a clear understanding of what you learned last week of, this is still buyer's territory, this can be very dangerous to sell against the flow. Okay, so I wanted to throw this oddball at you today to be like, can you react normally when the market gives you something you were not expecting? Okay, so when this happens, I want you to keep close attention. Like, oh yeah, well, I was expecting a sell, but then the buy came in. I mean, I did make some profit out of that, but then when the buy came in, it's like, huh? Why is it going so long? Well, because this guy never gave up his ball. And that's the bigger guy, right? These are just minute fading, minute momentums. But this is the main guy holding the grounds. Okay? So we were concentrating on the sell side, and there is still profit on the sell side. But if you want to make it in a healthy way, you want to be sustainable in Forex, go with the buy side. Go with the buy side. Fade the sellers and go with the buys. Okay? So let's go on to the next example and let's see how well you think of stuff like that. Okay, so in this example, we're going to do another sell example. We're going to be talking about pound USD on the 60 minutes. Okay, so this is a different time frame now. Same concept applies. We're going to do a sell side aspect. Now we're going to go jump straight into the sell. Let's say there's a sell is already active. So we're going to look at the sell as sell's been going down. He breaches. Sorry, let me put that line there. He breaches. He holds. He goes further down. He breaches. He holds. Okay. He goes further down. He breaches, which is here. And when this breach happened, notice this is the breach area, but the circle where we draw of who's responsible, the movement started here. Okay. So even if we go above the circle and we challenge that, so this is like an example I'm going to show you where it becomes difficult to catch sometimes. And this is fine. You need to learn to let go at times. So I'm going to give an example of when it's difficult. I'm going to give an example when it becomes easy. Okay? So we're going to do both sides of this. So here, when we have this area where the market's just rotating, and then it just bounces up very, very hard, right? So let's start the fading sequence here. We know it's seller's territory below this purple line or below this circle. We know it's seller's territory to begin with. We're watching the buyer momentum fade. So we got the buyers, pull back 80%, buyers, no higher high, pull back. We're like, buyers, okay, he's making a higher high, pulling back a little bit, buyer, full pullback. Okay, now that he's done a full pullback, we know that, hey man, the buyer's dead. He's got no momentum. Show me that he cannot go up anymore, or his second attempt goes up. He breaches. He goes higher and higher and higher. And then he maintains grounds, and we're like, where the hell did he get that energy from? How the hell did he get that power? Wasn't he dying? This happens sometimes. Where he just gains momentum and then he maintains grounds. Okay? When he maintains ground, we can see he rests only 15% and reactivates. When he reactivates, no higher high, and then he starts to go down and down and down and down and down before you realize it. He's done like a 800% retracement, and you're like, he's gone. But he went so swiftly and so quickly that I didn't get a chance to get in. Okay, now I get this is like a 10-hour movement. You can just jump in anytime, but that's not precision trading. We're not the type of people who just jump in because something's moving. We want to anticipate, not participate. I say this a lot. You want to anticipate, not participate. You participate, you will lose. There is no such thing as an opportunity. If you hear about an opportunity, it's too late. Okay? So always remember that concept. All right, now, when the market keeps going down and down and down and down, then here's another situation. So we've breached this area now, and responsibility of the guy who moved the move is up here now. Okay? We're still in a seller's territory, so anything below this area is seller's territory. So here comes the sellers. Boom, 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 boom. No lower low at this stage. The buyers tried to come in. Slight pullback. Buyers tried to come in. No higher high. Big pullback. Now, big pullback means, hey man, that buyer is dead. That buyer is dead. But then he gets reactivated. He comes right back up, which means there was no lower low. Okay, that's fine. I'm watching the buyers like a hawk. The buyer's going up, pauses a bit. He goes up, pauses a bit. He goes up, more wicks and stuff like that. He's slowing down, pauses a bit, no higher high, and then boom, takes that drop. Now that he's taken that drop, you're like, okay, Rubber Band Man's tired. He's out of his momentum. He's doing his last attempt. He goes up, full turnaround again. You're like, okay, it's time. It's time for me to prepare for my sells. Now, let's do the same thing as we were discussing earlier for the miniature buys and sells. Okay? So let's do the miniature buyers area. Here's the buyer goes up, halts a bit. He goes up again, halts a bit, goes up again, halts. So it's not like it's a fake high. It's actually holding higher and higher. So let's move this line up to here. And then he breaks it, and then he holds below, which means he's no longer in buyer's territory, but rather in a miniature seller's territory. As he goes down, think now as a seller's territory, because seller's territory picked up. That's the territory you want, because the big boy is also saying seller's territory, right? That's the original that we were watching, the major move. The minor move says seller's territory is also back. As he goes up and he pulls back down, notice no lower lows. He just pokes out and he comes back in. The line stays there, and the guy who starts it all stays up there. Let me draw it up here. Now, if you know this information, do you know where you would keep your stop losses? Right? Think about it for a moment. If you know this information, now you have a better understanding of where your stop loss should be. Okay, so let's keep moving forward. The market pushes back up. He does the same thing again. He does it one more time again. He bounces off this area, goes up higher, halt, 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 retracement. Struggle up, struggle up, struggle up, struggle up, death. No higher high sequence in this area. So any area that you activate a sell in here is a higher odds that your trade is going to be more fruitful. Okay? And this one is the one that works. So I hope you can see the difference between when a trade is fun to catch, or more, it's much more smoother to catch, something like this, versus when a trade just runs away and you're like, okay, next time. Don't worry, this is just pound USD. Dude, there's a million pairs out there. There's a lot of pairs. Okay, if you aren't focusing on the major stuff, there are like 27 good pairs out there. Okay, like pound USD, pound CAD, pound New Zealand, and then USD CAD, USD yen, you know, all the major stuff and all that stuff. There's so many options. Don't force your opinion on it. Don't force your opinion. Let it give you an opportunity, then you take it. If it doesn't give you one, you leave it alone. Okay, so hopefully this example was useful. On to the next practice example. Okay, in this week's lesson, what we're going to do is we're going to master out the ideas of the different states of the market. You know, there's different conditions that the market flows in. Now, generically speaking, everyone goes through, the market has 3 different stages, you know, the range, the channel, and the trend. But did you master it? I'm going to say this every single week until your brain says, I am not going to do anything until I master it. I'm not going to even take out the trash until I master it. So this is something I want you to start taking a habit of doing in your life, mastering anything that you do. If you master it, you notice everything. You notice the little subtle details. Okay? So we're going to go in through all these courses. We're going to start with the ranges, and I'm going to explain how we look at ranges and how you should be looking at ranges going forth from here. And then we're going to go into the other aspects. So ranges first, okay? So let's start with the lesson here. This is the Euro USD on the 15-minute time frame. And we're going to start off with, you have an understanding of buyers and sellers already, right? So we're looking at sellers coming in here with lower highs, lower lows, and stuff like that. And with the lower highs, lower lows, it reaches this stage here, where if I put my line right there, you can see this stage never gets crossed below, neither does this stage ever get crossed above. Now, you can start saying right now that this is a range, okay? Okay, how many of you guys watching this right now think this is a range? You know, just speak it out or say it in your head, that's a range. How many of you guys are thinking, well, that's still a trend state because it's downtrend. This is below this break area and it's holding, which is seller's territory. Okay? How many of you guys might thinking, well, if I look at this like that, it almost looks parallel. Like, oh man, that's a channel. Different perspectives. And they all could be correct. It's how your perception of the market goes that makes the difference, right? So if it's your perspective against my perspective against a third person's perspective, then one of us has to be right. And then next time we do this, again, one of us has to be right because someone's going to be wrong, right? It's always going to be in that cycle. So it's just an opinion of perspectives. But what I'm going to do is I'm going to give you my perspective on how I see things, and I want you to try it out. Okay? Everything I always teach you guys is don't take my word for it. Go do it. Just get into it. Okay? So let's take a look at this again. So here comes the downtrend, pulls back, downtrend again. Very weak, very gradual, and then it dips below. Once it dips below, it maintains grounds below this area. I personally look at this as still trend mode. And this is a miniature range. A miniature range is basically looking at this. Basically, imagine if you're looking at this on a different time frame. Okay, we're going to discuss time frames as well. That's one of the topics in your course coming up. So imagine if you're looking at a different time frame. Notice how big this would look if you were looking at this on a smaller time frame. Notice how tiny it's going to look if I go up a time frame. Right? So what does it mean to you then if I go up to the 1 hour? What does it mean to you then if I go down to the 5 minutes? Right? Perspective, again and again. So if I keep a bird's eye view perspective, I see a trend. Once I keep a bird's eye view perspective, we can see the breach has happened going down and it's broken below this line here. Now, once it's broken below this line, he comes all the way down to here, swings up, swings down, no lower low, swings up, makes a slight higher high, and now we don't know if it's a range or a trend, or it's a trend up until now. And then we start noticing certain conditions like, okay, this was the lowest point, which had no lower low from this guy. Okay, so that's the lowest point right there. And for the highest point, that's the highest point because we went above this guy and we held above there. So that's the highest point up there. Okay, but going forth, the market comes down a bit, goes up again, comes down a bit. Now he hasn't gone below this, he hasn't gone above that. But we don't know it's a range yet until we see some data. Now, one of the data that we're going to see at this stage is, oh, look at this. He just dips right below. It's like, oh, he's breaking. The trend resumes. But once the trend comes back, now what I like to see are fakers. You see earlier, when I see stuff like this happen, there was no faker. He held below. Here, he's holding below, but even below the below, if you want to put it that way, he made a faker, which means we're now working with something that has power on both sides. Which means power on this guy who's saying, we're going to sell everything we got. You know, we got power from this guy saying, you ain't coming down here. Every time you come down, I'm going to smack it back up. Now we're working with touch number 1, touch number 2, and incident number 3. Now, generally, people need 4 touches for a range. But I'm going to teach you how to do this with 1 touch, 2 touch, incident number 3, with all this information ahead of time. Okay? You have to read all that information to get to this stage. Once you get to that stage, now you're stalking it like a hawk. So, as a range trader, how do you trade ranges? We got 1, we got 2, we got 3. So obviously on the 4th point, we're going to be hitting the sells, right? So let me drag this all out. And then it's like, let's take a look at this here now. How come the sell doesn't activate from there? That's a range. The sell should work. Now, if you remember from the previous lesson, what we talked about, the fading concept of if that buyer is coming up super hot, pulls back only 15%, and comes in even hotter, you think he's willing to give up his throne? Is that rubber band man tired at all to you? Keep that in mind. Keep that in mind. As he comes down and he goes up, he tries again, and as he comes down again, and then he tries to make a higher high, pokes through and comes right back down, again, incident. Okay, we're going to be talking about probes and all this stuff in one of the lessons, and it's a very, very interesting lesson. I think that's going to be towards week 5 or 6 or something like that. Very interesting area. Okay, these probes, these are incidents, and these incidents tell you a story that someone is there. Someone is there. Okay, all this time you have the awareness that it's seller's territory, but at the same time you're looking at this as a range. Because in a range, you're trying to execute the trade with an understanding of it's in this zone. Okay, it's in this zone or area that I want to be hitting the stuff. Okay, this is close to the zone, but the story doesn't make any sense on the way up. This is close to the zone, but I can't quite hit it there yet because he's too strong on this way up. It's like he made a higher high. But the moment he crashes right back down, right there, it's like, aha, gotcha. Now I know what's going on. I have a better understanding of what's going on. So now we're working with a sell side. Now, you might be able to argue with me that, Naveen, isn't that a little mini range there? Yes, but we're not looking at it as a range in those sequences, not these little bitty tiny ranges. Remember that. We're not working with stuff like that. We're working with a range that has some data in it. Okay, we're working with a trend that has some data in it. Leave out the minuscule stuff, the little itty bitty tiny stuff. Leave them out. Get an idea like a bird's eye. Be the eagle in the sky. Okay, once that thing starts coming down, you start seeing that, okay, Now that I know the sequence, the flow, and I put together my story of the sellers and buyers, I put together a story of the fading out of the momentum of the buyers. I put together a story that it's a range, so I want to be close to the top as possible to execute it. You put all that together, and you now increase your ability to hit the trade as far away from death as possible, because this is death down here. Because right around here, at the bottom of the range, you don't want to be activating your cells here trying to chase the market. That's the worst spot to do it. But unfortunately, a lot of people in the industry do this. They hit it only once it starts to move. Right? So do you guys agree with me now? Anticipate, don't participate. If you participate, horrible prices. Horrible, horrible prices. Anticipate. Anticipate. Okay? So let's move on to some examples for this. Okay, so in this practice example, what we're going to do is I'm going to pull out the Aussie New Zealand 15 minutes right here that we have. And I'm going to spice things up a little bit. I think this should give you a good practice here, okay? So I want you to focus very carefully. These videos are available to you to watch again and again and again if need be. Pause, rewind, watch, pause, rewind, watch, rewatch, and rewatch, and rewatch. Mastery. Remember that. You're going to hear that word again and again. Mastery. Okay, so let's continue with this one. Now look at this one here. Okay, so by this time you've probably mastered the idea of the buyer's area and the seller's area, right? So the buyers are coming up here, no higher high sequences, and then it breaches above, so your line's right there. Then the buyers are going up, holding, breach. And as they breach higher, they breach this area, right? Once they've breached this area, we're looking at, okay, once they breached this area, they kept going higher and higher and higher, but then they never made a higher high after this. Look very carefully. That's the spot. That's a faker. He never made a higher high, and he starts coming back down. Now, remember, this is the breach zone, and the guy who is responsible for the breach, this fella here. So we're looking at two spots. Now, very carefully watch this and how we anticipate a range. So we got zone number 1, okay? First touch. First touch. Second, okay? We're unaware it's a range right now. Up until this stage, until the second touch, this is a trend. Okay, this is a trend up until this stage. I'm gonna move it further. Prices start coming down, down. Notice how it breaches right below this area. It's like, whoa, it even broke down the guy who started it all. It not just went through the breach, but even lower. Mentality of the world is it's a sell. Markets jump right back up. Now that they jump right back up, it's like, someone is here. Well, maybe it's our same guy. Let's bring our line down to here. And maybe it's our same guy. So he made a lower low, but then he jumped right back. Incident. Incident number 3. Ooh, sorry. Incident number 3. That's part number 3. Now we're starting to work with, hey, maybe we're working with what we call a range. So we're going to drag our line across from the top and say, well, that's our upper limit. Our lower limit is down here. I can't buy it yet because look at that strength. There's no way. I understand this whole thing is like in the buyer's territory still. I understand that it's probably developing into a range, so I want to get down as close as possible. Okay? So we're watching it carefully, piece by piece. Okay? Sellers, pull back, sellers, pull back, sellers, pull back, sellers again. And then when we see these sellers coming in, we're like, okay, slowing down because this is a sharp retracement. Goes down again, same spot, but jumps back how much percentage now? For those of you who are saying 100% either in your mind or out loud, preferably out loud, that's the best way to learn. But even if you're saying in your mind, good. We're seeing momentum fade. We're seeing momentum fade. But remember, there's that miniature sell zone here. Still seller's territory because the guy who started it all is here. But if that's the case and we know it's a range, we can't wait to breach that area and buy it up here because then we're not anticipating, we're participating. right? Keeping that in mind, we still want to activate somewhere down below as if we want. Watching how the buyers come in hot and the sellers are giving up the range, we want to see the sellers give it a one last attempt. They're coming in, coming in, coming in. Same down towards the same area again. Comes down, slows down here. Candle by candle by candle by candle. It's not 1, 2 drop, 3, 4 rise. It's 1, 2, 3, 4 side, 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 side. It's maintaining grounds in this area as a higher low. You know, the signs of an uptrend. It's the first sign of an uptrend. Okay, as we watch this, the movement starts to pick up. It starts to pick up. Now you're getting signs of, hey, looks like the buyers are back. Now we want to be close to this purple line as possible to be able to ride as much as we can. But we know there is a problematic area here where the breach happened and here. So we're going to watch these areas carefully. If once we hit the buys from here, we're going to watch those areas carefully. But the target is to hit it back to the range because we know the range is alive without the fourth touch. Okay, so we're going to keep going. Reaction, 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 holding. Notice as this buyer is coming here, he's holding grounds. Holding, 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 holding. And here comes the buyer. First area of reaction there. Okay, big wick, tries to get through, smacks back down. But if you remember from your last lesson, look at the strength of this buyer. Would you say he's still healthy, this rubber band man who's running? He ran this far, but he got smacked down this far. That doesn't mean he's dead. Let's see what he's got. He goes again. He rests very little in that zone. And then he takes off. Okay? Takes off and he gets back to the near top area where he does his halts again. Now, I hope you've understand a bit with how I look at ranges personally. Okay, I don't look at ranges as, well, what we discussed, this sideways movement. Here's like, that little itty bitty thing there is a range. No, it's a range if you're looking at that on the 1 minute. But I'm not interested in that range. I'm interested in, tell me a story. Tell me a story of why it's a range. Don't give me 1 plus 2 plus 3 plus 4, it's a range, and then I'll get in when the whole world gets in. No, I want to step ahead. I want to be better than everybody else. That's the reason why we're Forex watchers and urban Forex, right? We're trying to be better than everybody else. If you want to be better than everybody else, you need to step up the game, right? Okay, so let's do some more examples and it will get more and more clear. We're going to do this a little bit now. We're going to step it up a little bit like military style, like the way I train my elite members. So we're going to do trading practice after practice after practice. And I'm going to walk you through, and this time you're going to verbalize it out loud or think about it in your mind as I scroll through the charts. And you want to think, is this a buy? Is this a sell? Is this a range? And how is it developing? Okay? We're going to move on to the next video. Okay, so in this practice example, we're going to be looking at pound Aussie on the 4-hour chart here. All right, now let's take a look here. Now, the market is coming down from a downtrend, right? It's coming down, lower lows, lower highs, breach again, comes lower. And in this whole big boy phase, if we understand it, it's like, okay, anything below that is still seller's territory, right? You all get that so far. Now, the whole thing going further is now if I go like this, okay, it's starting to pull back. We're watching the pullback phase. Now, notice a time lapse between this pullback phase. It's from the 11th until the end of July, basically, right? So this is July 11th until the end of July. That's a long period of halt, right? So we're gonna stalk this on its way up because there's this miniature upward movement, right? So it's this downside slows down, the rubber band man slows down, comes down, slows down, and then he takes complete rests and begins the buyer rubber band man, right? So he starts going north. Now in this north, he goes up, halts, breaches, goes higher. We're going to put a line right there. That's the breach as he goes higher. Then he pulls back, holds, goes higher, doesn't make a higher high, but comes right back down, holds, goes higher, doesn't make a higher high, comes down, and then he finally makes a higher high, and then where he holds. So the breach of this whole scenario happens from above here. Okay, again, he goes up, halts, goes higher high, and then he starts holding in this area. After that, the next hold is up here because he makes no higher high, no higher high until he finally gets up to here. Okay, so we got the guy who's responsible initiates down here, and the guy where the breach happens is on this line, right? Because he breaches above that spot right there. Okay, once that breach happens and the market starts to go long and long and long, and each phase, if you actually look at it, if I draw like a dotted line here and say that, okay, since this price never actually went higher, look at that. He just never goes higher. This is why it's important to map out your areas as early as possible rather than later and saying, well, I think my line's up here, because that can be incorrect. Okay? Because there was no higher high at any stage. It just keeps collapsing down. So if you look at that buyer, the buyer is pretty much done, right? The rubber band man buyer, he goes up, 100% retracement. Goes up, breaks his new high, but then 80% retracement. Goes up, no higher high, 50% retracement. Goes up, higher high, comes down 50%, but no higher high, because he comes right back. Then he goes up, no higher high again, but he comes collapsing down to 150% retracement. Okay? So the buyer is dead at this stage. Now, in this whole sequence of things, the reason why I want you guys to focus on ranges that are big enough like this is because you can see the momentum of that rubber band man. If you simply just say, well, that's my range here. Now, can you tell me the momentum of that? No, it's difficult to see the momentum of that, right? It's like, well, for me to see the momentum of that, I'm going to have to go down to the 1 hour or the 15 minutes. But if I start doing that, then what am I trading? I have no idea, because I'm just hopping around like a Bugs Bunny, you know, like I'm just going from this time frame to that time frame to that time frame, because I'm looking for something to do. Don't do that. Don't look for stuff to do. Okay? Be patient, because patience pays off a lot more. Okay, so when you're looking at this whole sequence, you have your bottom line here starts to develop. You have your upper line starts to develop, like, no higher high. So it must be the seller's turn. Now we don't know it's a range yet. Okay, all we know is we have reference points. We have point number 1. Okay, point number 2 comes with a incident, and then point number 3 yet once again holds in this area. So it's like, okay, if he's not going higher and he's not going lower, we have now developed a range. But notice, we've developed a range ahead of time into the 3-point stage rather than a 4-point stage. Okay? And one of the piece that we like to see is incidents. We got an incident involved in there as well, where it's like, faker. Okay. So as we see this faker, we can see this faker come down as the seller. Like seller, pullback, seller. And then a complete turnaround, just like as if this low for this seller never happened. So it's like, okay, well then what is that? The buyer? If that's the buyer, well, then let's see, before the buy can begin, the sell is doing one last attempt. So again, let's start from here. Let me clean up all this. Let me put the line back here, and let's begin with the seller who begins from over here, right? Because this is the buyers up until the stage. Then the seller starts coming in. He breaks below this line. I'm gonna put the line right there. He breaks below that line. Okay, breaks below that line, drops further, but jumps right back up. But if he breaches that, who are we challenging? This is the guy who started it all, and this is the breach. So he can go above the breach, still doesn't mean it's out of seller's area. It's still in seller's area. What's the main function of our trade? Even though we know we're in a range, we also know we want to be on a downside as much as possible. Now, knowing this information very carefully, we're seeing sellers began, they became strong, but the strength was not real. They came right back up very, very strong. It's like, my rubber band man is extremely weak. Then he tries again and tries again. Again, weakness. And then he gets snapped back. Now, this snapback shows you strength of the buyers coming in now. Well, if that's the buyer, immediately his retracement is 90%. He tries again, 100%, no luck. And then he rolls over. He rolls over right there, and he turns around. Now, if I extend this out, okay, you have to understand one thing now. Because we're thinking range mentality, we're also trying to understand when is the right moment as close to the range as possible. Okay, we don't want to be hitting ourselves over here. That's participating. We want to anticipate when the movement can happen. Okay, so when you see stuff like this where it's like, okay, well, give me the buyers. Here comes the buyer, and buyer's extremely weak. Buyer tries again, doesn't get anywhere. Tries again, complete turnaround. Lowers, lowers, lowers. Okay, game on. Game on. Anywhere in this zone, if you execute, and your stop's above where the buyers called it quits. Anywhere in this zone gives your stop loss a safe area. It's not just putting it at the recent high, as we discussed in some of our recent videos, right? It has to be with that logic of why there? Why not here? Why not there? Why not anywhere else? You know, why there? Why is this one important? Is this because it's the recent high? No, we're not doing that recent high, recent low like nonsense that the industry does. We're not going to do that. Okay, so once that happens and the market starts collapsing, your sell trade activates. Now, in the sell trade that activates, we're watching this area like a hawk because we're unaware it's going to breach below. Okay, but our signs of the breach below happening is high, but we still don't know. It can still bounce back like it did every other time. Imagine if you hit the sell from here last time. That will work, but it's going to work all the way down to down here, right? So you got to trade there. One is over here. This is not a trade here. That's not a sell. Okay, so you gotta watch these areas for. I'm sorry, that is also a sell here, because this line maintains. So let's clean that up and show you the 3 sells that were in this range. Okay, so market goes up, pulls back, goes higher, pulls back, maintains grounds, goes higher, barely makes a higher high, faker, comes right back down, goes high, comes down, goes high, breaches. Okay, now with this breaching happening, this whole concept of the breach happening only happens above this zone. Okay, because all of this is part of this guy trying to move. It is only this guy trying to move. No higher high, no higher high, no higher high, no higher high. And this no higher high concept can be extended across and be like, that's my range. Okay? Right there. Okay? Exits in this zone. Then the the buyers come back up, or the sellers almost call it quits. They're coming up 100%, but remember, they're in that mini seller's territory still. And they slam right back down 100% with the inability to go back up, which means he's not willing to rest anymore. Next trade, so that's 2. There's 1, here's 2, and then you have your third one in there. There's your 3. Sorry, there's your 3. And with those 3, your third one actually picks up some steam and momentum because of the big movement. But up until then, you got trade after trade after trade. Buying, not logical. Not logical. I personally wouldn't recommend it. Okay. All right. So on to the next example. Okay. So here's a nice tricky one for you guys. Okay. Just to spin things off a bit to confuse you a little bit, but it's good practice. Good practice. Okay. This is Euro Yen on the 4-hour charts here. Okay. So if we're gonna start with the flow of where the markets are going, we see the market makes a higher high here, right? As it makes a higher high, this obviously means he's breached this area, and the guy who started it all is down here, right? Now, if this is the area who the guy started it all from, that is basically buyer's territory. Now, where would you put your line as it goes higher, pulls back, and then it breaches higher again? So the line, if you're saying the line is here, ooh, sorry, let me remove that. Let me put the line right there. So if you're saying that the line is there, that is correct, because he did breach higher than that. But then did we have any higher highs since then? The moment you don't have higher highs, you start drawing it. So if you're saying the line is here, that is correct. And if you drag it out, that is also correct, because the line stays there. Now in this process of it's making what we call a range here. Now, few aspects. We got one area here, no higher high. One area here comes down to here, rebounds and gets back up. So if we look at the buyer's sequence, buyer's going up, rests a little bit. He goes up a little bit more, rests a little bit more, goes up just a little bit more, and he rests like 300%. It's like, okay, my buyer is running out of steam. But he's still in the buyer's territory, so the buyer retries. Up, struggle, up, struggle, up, and then crash. How much strength does he have to use? Okay, so now the sellers come in. We're also approaching step number 3. Okay, 3 touches so far. We're like, this looks great. You know, we're looking at a range developing. No higher highs, no lower lows. So if a range is developing, here comes the seller. Seller comes down, rests a little bit, halts, breaks below. So it's like, okay, if I was to move my line of where the seller is, here is the breach below. And as it breaches below, who's responsible? This guy. Okay? As it breaches below, he's responsible. But he comes down, he runs this far, and then he comes back to rest. Now, that's okay. But as a range trader, we were looking to do a buy on this, considering the market was in buyer's territory above that big purple line, also considering it's above this area in the buyer's territory. Then why in the world did our range not work for a buy, but rather it's going down for a sell? This will happen quite often if you don't do your homework well. Okay? And what I mean by this is here. Take a look what I'm just about to show you. This is why I said it's a tricky one. I was trying to do this on purpose. So now if you just see this little bit more information, can you tell me whose market are we in? So wouldn't it be this guy? That's the breach where it happened. Anything below this spot is all seller's area. Everything is seller's area. Doesn't that change your perspective on how you want to approach that range as well? Okay, you want to be more on the sell side of things, right? Okay, so these things are very, very critical to find out, well, how are we going to deal with this? Is this a buy? Is this a sell? And that can make all the difference in the world. So using all the information that you have so far, putting it all together, and with the knowledge of ranges, this is why I'm sequencing all your lessons in a certain aspect where the priorities come in a certain way. I teach you some information in the middle, and then the high priorities lessons towards the end, which is how to connect everything and how to find out where you can go wrong and how to avoid making those mistakes completely. Okay? So we're going to call it a end of the examples for the ranges. I believe you got the hang of the ranges, how you're using multiple touches. And we're going to step into now channels. We're going to see how channels are slightly different using the same variation, because channels are just like ranges, but tilted. Okay? So we're gonna breeze through the channels a bit as they're very similar. So we're just gonna go straight into examples after examples after examples. Okay. All right. On to the next video. All right. So this one is channels. Okay. This is pound New Zealand on the 4-hour chart. Now channels are basically like ranges, but tilted. So we're gonna be looking for similar aspects for channels as well, right? We're gonna be looking at stuff like how many touches does it have, and if it's a channel, how can we expect it? Now, channels become a little bit more easier, especially if you are very, very in tune with the buying and selling process. Now, again, I'm going to repeat this to you guys. If you haven't mastered the buyers and sellers, and if your brain is thinking, oh yeah, I know that stuff. It's not for me. You know, I'm an expert. No, go back, watch it again and again and again and again, because that little basic thing can make a very, very big difference in how you trade. Very big difference. Okay, so in this prospect, now when we see channels have one thing that's very unique. A typical, when the market goes higher high, higher low sequence, the higher low in this one, so for example, if I do this, you see we have a higher high here, then we have a higher low. Notice how the higher low stops at support equals resistance. In a channel, that does not happen. When he makes a higher high like this, or he tries to make a higher high, he doesn't stop at support equals resistance. When he tries to make a higher high, he doesn't stop at support equals resistance. A channel has very deep retracements. Imagine a channel is like a really weak rubber band man. He's just running and he's constantly tired. He runs, he tries to breach it and he comes down tired. He runs, tries to breach it and he's tired. So it's just a big, tired running man, basically, if you want to look at it like that. Okay, so that's a simplistic approach of what a channel basically is. Now, if we look at channels and we do it very closely with understanding the flow of the market, this can make all the difference in the world. So for example, if we're looking at this buyer coming in, then the sellers come in, and as the buyers come right back in, we have a breach here. The buyers step in, and then no higher high, no higher high, no higher high, and then we have another breach, holds above the breach and takes off. So that hold above the breach is going to be that spot right there. Okay, now even though the market does not stop at its support equals resistance, we know that all this area above here is buyer's territory, and that helps you with the channel. Now when you see stuff like this where he's barely made a higher high, he's coming down quite low into support equals resistance, and he's coming in deep, but we know he's still in buyer's territory, and you start to see a slowdown in the market. A slowdown where the seller running man starts to slow down. You start to get a hint of, hey man, looks like slow down. Okay, here's a seller, rests a little bit, seller comes again, rests a little bit, seller comes again, rests a lot. He's like, whoa. But our dotted line, if I was to put it on the seller, is here. This is all still seller's territory. He just can't make a lower low anytime, right? No lower low, no lower low, no lower low, but still in the seller's zone until boom. Now, major buyer is here. Minor buyer is also here. The seller attempts it one more time to make it as far as he can and fails. And your buy activates from there. Now you're looking at this like, okay, I activated my buy just based on the read. I'm just reading the story that there is a buy over here. So you take that buy, you make some money, you're happy with it, but then you start to realize this is happening again. This is happening again. And my lows look very, very tight like this. And the fact that the market is coming in very, 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 very deep this time. He's again not stopping at my typical support equals resistance. He's coming in deep, but I know this is buyer zone, right? So that's how you can start gauging and saying, well, can I get in on this one? In this particular example, it's tough to get in on this one because you don't see any momentum. You don't see any momentum. All you see is, here comes the seller. The buyer just kicks back in. So imagine if this is the buyer. Buyer, little rest. Big buyer, little rest. Smaller buyer, like so smaller run. And then he takes a very big rest. Now, very big rest, but he runs again. And no higher high. So, it looks like he's dead, but at the same time, he jumps right back in. So we never get to see, well, when is he actually dying out so we can flip the side. Okay, and then the market starts to make its move. He finally goes up and he dies a little bit higher. Okay, if I were to extend this out, he dies a bit higher. Okay, and then now you have 1 touch, 2 touch, 3 touch, 4 touch, 5 touch, and then incident. Okay, on the 6th touch. Channels can go on a bit too, just like ranges. Ranges can go on very long as well. So do channels. Okay, don't get caught up with little itty bitty channels like this. A little itty bitty channel like that. Don't get caught up into stuff like this. Yes, those are correct also. But if you can't read the momentum of it, there's no point. You want to read the momentum on the chart you're looking at. Okay? So if your question to me might at one point be like, but Naveen, what time frame is the best time frame to trade? And it's a very common question I get. Just think of it this way. If you cannot read it on the screen you're looking at, and you're having to switch a time frame to find the information you want, well then you don't know your time frame. Whatever chart you open, you should be able to watch everything that you need right there. Okay? So we'll get into time frames later on. That's one of the lessons as well that I'm going to be covering quite intensely. So, but for now, that was the intro to channels. Let's do some more examples for channels. Okay, let's do a couple of examples so we get a better idea. Okay, so in this practice example, we're looking at USD CAD on the 15-minute time frame. And as we can see here we have the buyers are in control. And every step that the buyers keep breaching, we mark the territory. But like, okay, he had a breach here and then he never made a higher high. So the line goes there, right? Breach there and then no higher high. So that there was no higher high since then, so the line stays here, right? So the market keeps coming back down. Notice he doesn't stop at support equals resistance. If I do it with this marker, he doesn't stop at support equals resistance, but comes in deeper. Okay, now in this whole phase, he makes a move, makes a move, makes a move, gets up to this high. Okay, I'm gonna move this around a bit. As he starts going up, breaching, goes up higher, holds, breaches. So we're gonna put this here, goes up higher, comes down, holds, goes up higher, comes down, no higher high sequences here. Okay, no higher high, no higher high, no higher high. So if I was to say he needs to stop at support equals resistance, he doesn't at any of this one or this one. He goes through it, comes down lower, because we're working at where the buyers are still in control. They still have momentum, right? So let's watch this carefully. Here's the buyers. They pull back, they hold. So the line goes here when they breach it. Once they breach it, it's hold, hold, breach, higher high, comes down, hold, hold, breach. Okay, but now notice the difference between this breach and these breaches. There is some variations with this though, because some variations where the breaches are happening, like you can look at this and be like, okay, the market breached above this, but then you can also look at this red candle like, oh, is that a breach? Or is that just a buyer rest, buyer rest, buyer rest, buyer rest, and then as the sellers come in, the sellers is what makes a breach basically. Okay, so when we see this in this context, it's like, okay, the buyer blah 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 blah, there must be a seller in there, holding, breach, and then the buyer, big pullback buyer, big pullback buyer, big pullback buyer. Okay, and then here comes the sellers. Okay, so when we're looking at this area, everything above this zone is still buyer's territory, and the guy who started it all is this guy. Okay, so first phase comes in, sellers, 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 no lower low, no lower low in this miniature sellers area. Okay, I'm going to draw this across. No lower low, no lower low sellers area. And then it finally gets higher, challenges that guy up there, and then he starts to turn around and make higher highs, which is like, okay, the buyers are back in control. So if that's the case, we're like, we're making slight higher highs. Okay, but we're not stopping at support equals resistance. We're coming in deep and we're making slight higher lows. Okay, extend this across. So now we're starting to get some information that, could this be a potential range? channel, sorry. Could this be a potential channel? Because we don't know that information yet. We got touch 1, we got touch 2, we got touch 3, and we're watching as the buyers go up, pull back, go up, pull back, up, pull back, up, pull back. Now, no higher high from this red candle here. Notice, no higher high, keeps crashing back, keeps crashing back, keeps crashing back, keeps crashing back, keeps crashing back. So what did they breach? They breached this fella. We're going to drag this across. This is all still buyer's territory. And then the buy reactivates from down here. Now notice how this area down here is not as close to the bottom of the channel. But the story lines up. The story lines up as here comes a seller. Here's this little bit of rest. Here comes a seller again. No lower low. Pulls back. Seller again. No lower low. Dies. Okay? So when you're trading in something like this, you have to be aware that you don't want to activate your trades up in this area here. You want to be able to make that judgment as close to the bottom of this line as possible to keep you away from, you know, participating. This way you can anticipate the move. Okay? So let's take a look at some more examples. Now this was a little bit more tougher. It's a little bit more tougher, but let's go into some more examples, and you'll get the hang of how channels really form out and how we can actually gauge what's actually happening. But do you notice how channels have less of a weight than the ranges do? And you'll see they'll even have less of a weight compared to trends. So if you were to put it in a ranking sequence, okay? So we got trends, which is the strongest rank in terms of the strength of the rubber band man, right? He's the fastest, and he rests a little bit and he keeps going. That's a trend. He stops at SNRs basically, right? And then we have a channel. He runs, he rests a lot. He runs, beats his record by a little bit, he rests a lot. He runs, beats his record by a little bit, rests a lot. Okay, so that's power number 1. The second most power, okay, not as strong. And then the third power is this guy is dying. He can't even beat his own records. He rests a lot as well. And that's your range. Okay? So if you were to put it in a scale of powers, we're looking at the way you treat a range is different than the way you treat a trend. We're going to go into trends in a bit. But then the way you treat a channel, there is no specific strategy to it, but rather if you just simply put in buyers and sellers concept to it, it will solve itself. Okay, does that make sense? So if you keep that in mind, you'll get an idea that channels are actually quite easy compared to identifying a trend and identifying ranges. Okay, all right, so let's keep moving. Let's go to the next example. Okay, so in this practice video, we're going to be doing USD Japanese yen 60-minute time frame, and here I'm gonna help you guys out, look at it in a different way, and what it's gonna do is it's gonna iron out some of the questions and wrinkles that it might have in your trading. Something you might be watching one of those one or two of the previous videos, and you're like, what about in a certain situation like this or that? So I'm gonna show you some more tips and tricks on how to iron out those problems, and hopefully this is gonna solve that for you. So let's take a look at this one right here. Now notice how if I say, while we're looking for a channel, let's start you from here. So what's the general way of saying of how we're going to do this? Okay, so that's the seller coming in. He holds, he drops lower, so there's a breach. So that's the breach. Let me put the line right there. That's the breach. And once he breaches below, he never goes lower after that, but then he starts going higher. It's like, okay. Well, he not only went higher, but he also went higher than the guy who was responsible. So, am I still looking at this as a sell or is it a buy? Okay? This is going to happen to the lazy trader. Okay? Okay? So, this is not any one of you guys. If this happens to any one of you guys, I'm going to be upset. This happens to the lazy trader. Okay? A lazy trader who does not do his homework or his research on what's going on. Now, remember, if we're in a downtrend, we first finish the uptrend. Okay, so let's start from there. Let's start from there. So if we look at the scenario directly from here of where the whole thing started, okay? So this was going in an uptrend, pullback, uptrend, pullback, uptrend, pullback, uptrend, pullback, uptrend, and then the sell started happening. So breach happens here, comes down, pulls back, comes down, breach again. Here's the breach here. Who's responsible? This fella right here. Okay, he's responsible. So comes down, and then from this moment on, do we have a lower low? Nope. 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 Do we have a lower low? Every time there is no lower low. Okay, even if I put my line here, do we have a lower low? No, the price keeps coming back from this price. There is no lower low. Hence, the entire zone is here. A small detail, if missed, can cost a lot of money. Small detail like that. Right? Do you guys agree? If you're watching this, you guys can feel it. Like, okay, yeah, man, like, imagine if I was just like, yeah, I can see it's a downtrend. Let me just try to start it from here. Well, that's some money going down the drain, right? So you got to be very, very careful. You're better than this. You know, you gotta step it up a little bit. Okay, so don't be that lazy trader. Don't be that lazy trader. Do more. Do more. All right, so let's take a look at how this channel starts to develop. Now, as it's coming down, notice just like earlier when we said, oh man, this would have been a buy for most people. And that's the best thing. Let it be a buy for most people. You can watch this as still in a seller's area, and that deep retracement is like, come on, baby. Come on, baby. I'm waiting. That's an opportunity for you. You're that big boy now saying, I know what's actually going on. I look at it in a whole different perspective. Okay? So as you're watching it come higher and higher and higher as the buyer, this is the buyer, right? He's coming up as rubber band man, really strong. Rest a little bit, really strong, rest a little bit, slightly higher, no higher high, and then comes down crashing. So if he comes down crashing, that means this must have been his breach area, and the guy responsible must have been here. We're looking at the miniature size now, okay? In the context of a major downward move. Okay, so that's like the little point right there. The buyer tries to go up again, no higher high yet once again, and rolls over. Okay. Cells activate. Now you're like, we tried to make slight lower lows, didn't get anywhere. So scratch that. We tried to make lower lows, didn't get anywhere. So this can be like that. Okay, fair enough. But then my high came in very, very deep, but still was a lower high. Okay, let's keep that momentum going. We just keep that in mind. We're like, this may be useful in the future. It may be. We don't know, and we don't know as of right now, but it may be useful because my lows are not getting any lower. They're fighting at this price. And then finally we see when we took that sell trade, okay, in this zone here, when we take that sell trade, we're watching this area again carefully to see, hey, is he going to let me through or not? I'm not even sure. He pushes through, he strives, he gets lower, got rubber band man coming down, rest a little bit, coming down more, rest a little bit, coming down harder, and then no lower lows after that. So let's change this area to here. No lower low after that. Let me shrink this up. It's like, well, isn't that practically this area then? Isn't that what we're just doing? It's just practically this area. It's like we never went lower than that. Okay, so now it's a different type of channel. This is like a squeeze. Okay, we call this a squeeze with my other students. Right, so it's a squeeze. You know, the markets are like coming into what's also known as triangles. You know, or a wedge or whatever you want to call it. It's a squeeze happening, right? The markets are like squeezing you in. So when the squeeze is happening, you're like, okay, I'm aware my high is getting lower, but I'm not sure because of the squeeze if it might turn into a range because I don't know. Remember, that concept of I don't know needs to stay valid. What if my trend line is not like that, but is actually, that's not a higher high. What if it's a range then? Isn't that right? Perspectives, right? So perspective can change right there. So even though we draw it like that, we're like, okay, just in case, I'll leave it there, but I will keep an open mind. You know, flow like the water. I will keep an open mind just in case. So the only way to know for certain is we watch this like a hawk. First things we want to watch is, first of all, whose territory are we in? Major territory is down. Okay? Massive, the big monster territory is down. You got that out of the way. Next, as the seller was coming down, the minute guy, right? The little itty bitty guys, and you're like, okay, I'm gonna remove. I'll use a different color actually. I'll make this I don't know, orange. Let's go with orange. Let's be friendly today. Okay, we're coming down. We breach this area. We hold below. The line stays here. Then we come down. We breach this area. The line stays here. But then we never breach anywhere lower than that. But it also means we're still in seller's market. So we have a miniature seller's territory here, and we're watching the momentum as the buyer starts coming in. Buyer, pull back. Buyer, pull back. Buyer, no higher high. Buyer, no higher high, crash. So it's like, okay, so the sell is back on, but how in the world can I execute in this area? The risk is too high. And that answer is true. Even though that trade works out and he goes further down, that's not a trade you should be attempting. It's too risky, too dangerous. When the squeeze gets tighter and tighter like that, notice how even though you're right, look how dangerous it is. Right? Do you guys see that? So when you keep this in mind, that even being correct doesn't necessarily mean I'm going to come out winning. It can be very dangerous because your entry might end up late. You might get a slight slippage on your brokerage. If you're doing this on a smaller time frame, like 15 minutes or 5 minutes, trying to like scalp the hell out of the market, you can. But the whole point is, if you get a slippage or anything, look how dangerous that is. Your brain needs to be optimal to be like, grab it as high as you can. Use this power of this downtrend line. I can see that the buyers are dying. I can see I'm in a seller's zone here. I want to grab that price as close to that as possible. Okay? So when you see stuff like that, it becomes a little bit scary and dangerous. Like, okay, how am I going to do this? Things start to develop as a slight range afterwards here. This is a miniature range. Very, very tiny. No lower low sequence, no higher high sequence, blah, blah, blah. Okay? You know, spikes down, spikes higher. Nice little news event. So sometimes stuff like that will get you. It's okay. It's okay. Let that take you out. If you're involved in it, it's okay. Or you can do that extra work and be aware of the news is coming up, and I don't want to participate. Okay, you can do one of those two things. So let's go on to the next example. I wanted to make this example a little bit more difficult. Now I know things are getting more and more difficult as I'm teaching it. I want you to repeat after me right now. It is not difficult. It is easy. Again, repeat after me. It is not difficult. It is easy. The reason why I'm making you say this out loud, verbally, is because I want your brain to recognize the audio waves coming out of your mouth. Your belief system increases when you verbalize things. There's a whole course on motivation and physiology and the brain power and everything. But for now, when you keep this in your mindset and you're ready to learn, things get easier. But if the moment you say, oh, this is too hard, then things start to fall apart. Because then you will believe it's too hard. Right? So, let's keep going. Let's keep going to the next example. All right, so in this example, this is Aussie yen 60-minute time frame. Now, let's take a look at this one. Again, if we're going to be looking at sells, then we need to first find out where the buy ended. So higher high, higher low sequences. As this higher high, higher low sequences says they're done, and they started collapsing, and they got lower and lower. Here is the breach right there. But once it breached that, he got down to this low, but then after that he never made a lower low, he came back. So notice this is how far he got, and then he came back. So there is no more breaches. This is not a breach here because price got to this far and made a record of this is how far it got. So this is the movement he made, but he came right back. And all of this is not making a lower low from that. right? He's not making lower lows from that. So it still holds, still holds, still holds. The line maintains right there. And the guy responsible is that fella. Okay? It's a big one, isn't it? It's massive. It's massive. So got to keep an open mind for stuff like this. So let's redraw this. Keep it clean. We're like, here we go. That's the fella right there. And we're watching this as it starts to develop momentum. So he's going up, going up, going up, comes down, tries to make a lower low, what looks like a lower low. And this could be still a faker, right? This could still be a faker. It could be a news event that looks very large on this charting software, TradingView, but it might be different on your broker. So make sure to check that sometimes. A big spike sometimes is not real. Okay? So when you're looking at stuff like this, you can be like, well, if that's the case, well, that breach happened next was here. That's the breach where the next phase happened. So you can be right over there then. So, but anyways, we'll leave that here for now. Leave that here for now and saying this is all overall seller's territory. Okay, I'm going to put it like that. That's the big flow. In this big flow, we got sellers coming in, holding, coming in, holding, 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 holding. Here comes the buyer stepping in. Here comes the buyers, goes higher, pulls back, no higher high, no higher high, breaches, makes the higher high, little mini, let me draw that purple line, orange line, gets a higher high, holds it, no higher high, no higher high, no higher high, collapse. Okay, so the sellers are back. Now the collapse happened very, very hard. We see the buyers attempt one more time with no luck and failure, and we know all of this collapse had a breach here, so it's all miniature sellers area as well. Okay, miniature seller area right there. Now, his lowest point that the miniature seller area made was here, which means any of the price here never went lower. So, and anything below here is seller's area in the context of a big seller's area. Okay, hang in with there. Hang in with me there. Don't get lost here. Okay, pause it if you have to, rewind it, watch it again if you have to. In this whole concept, we're starting to now see, wait a minute, look at these deep pullbacks coming in. Look at these attempts to make lower lows, but they barely make it. They barely make it. So it's like, okay, we're getting a momentum starting to come in. We're starting to see our lines developing. Sorry, right there. Starting to see our lines developing. We got a little bit of poke outs and stuff like that, but we're starting to see our area developing. Now, what about our lower end? Do I draw my line like that? Or do I draw my line something like that? Let me lower it a little bit and say, what if that's my low? Well, then we're working with the squeeze again. Damn, squeezes all over the place, right? We're working with the squeeze again. So the whole point is, a channel or a squeeze or a range, make sure you have that one concept down, is which direction you want to go. Don't mess that up. 2, if you know that which direction you want to go, you also want to know how close am I to one of these edges, whether it's the top edge or the bottom edge. Okay? And you're looking at momentum because you don't want to get in too early and then later on you find out, oh, it's not a downtrend line like we discussed in the previous video. It's a freaking range. It's like that. That high never happened. It just slightly jumped up and came back down immediately. So that can happen too. So you got to be very, very cautious and very, very slow about this thing. Okay? But you know it's a miniature sell area here. And you know that you've drawn it for now as a downtrend. Like that. Voila. Okay? So you're looking at this as, okay, we're approaching this area. Let's watch it carefully to see what happens to it. So you see buyers coming in finally after the seller gets exhausted with no lower lows, comes back 90%, tries again, no lower low, and then he's dead. Okay, so now it's the buyer's momentum. The buyers crushed this area by breaching this zone. Let's do some little buyer zone here. Here we go. Little buyer zone there. Makes a nice higher high, pulls back, no higher high, and then he starts to roll over, roll over, roll over, boom. So it's like now we got an opportunity to see the sellers are back, but we are here. Okay, so what's going on in your mind right now? Is that a good trade or not? What would you say? I can't hear you. No, I'm just kidding. No, If you are saying it's too risky, that is correct. That is correct. It is too risky there. Don't take risks when it comes to trading. Try to avoid risks. Limit the risks as much as you can. If you chase money, you will lose money. If you control risk, you automatically make money. Automatically. It's like a side effect. Okay? So keep that in mind. Keep that in mind. Controlling risk is a money magnet. Okay? But chasing money is dangerous. It's actually a money repeller, if you want to call it. So, all right. So when you see stuff like this, so you start to understand that, okay, I get to see that I have a sell coming up, so on and so forth. Now, you might be asking, Naveen, this is the second time that we had a squeeze and the trade just runs away. Is there not a way to grab it in a fine-tuned way? Okay, is there not a way to do that? And the answer to that is yes, there is a way to do that as well. However, we're not going to touch base on it so well. But what I'm going to do is I'm going to open up the door. This is the Pandora's box. I'm going to open it up. I'm going to point to you of how else I would look at it. And your brain would automatically put all the education you've learned so far and figure it out. Okay? So how else I would look at it, instead of looking at it in a large scale in this cell coming in, we also notice we've made no lower lows in this concept here. But at the same time, whenever we started making breaches from here, the first breach, we also made no lower lows. I'm going to put the first breach here for the sell side. Here's the first breach, comes down, holds, and then he comes down, he breaches again, but that's not a real breach because he comes right back up. He breaches again, that's not a real breach because he comes right back up. I extend this out. Well, what are we working with? We're working with a range. And while working with a range, when I start to see no higher highs and a slowdown, I take my attempts from here. Because now things line up. Make sense? So, a little bit more risky, a little bit more aggressive. When you do stuff like this, you need high control on money management. Highly controlled money management, which means your regular trades that you do might be, let's say, 7, 8 standard lots. But when you might do something like this, you're like, okay, let's bump it down to like 3 or 2 standard lots. Again, there's a whole thing on money management. I got a course on that as well. But for money management, you want to control when you have risks and like that. You want to reduce risk in moments like these. Okay? So this pretty much ends the examples and lessons for channels. Hope this was very powerful and useful. I know channels are probably the easiest ones, but at the same time they can be annoying as hell too when it's not a channel, it's a squeeze. Okay? So let's get that right. Channels are basically the ones that have very deep pullbacks. Think of the pullbacks that are going in like 61.8, 80% pullbacks, 90% pullbacks. Those are the ones that turn into the most beautiful channels. Why? Before we end this video, why? Why are these channels such a good trading technique? Because when they pull back in so deep, people forget the original direction. And people start looking at this as, dude, it's a buy. Okay? So it's wonderful when that happens because they'll look at generic stuff, right? Oh, my support equals resistance was broken. He's going higher, it's a buy. So what do? They participate by hitting the buy right there, but what happens? Major stop loss. And they're sitting there saying, I don't know what happened. And then later on, they might draw a downtrend line like, oh, okay, it's a downtrend. But they're still oblivious of what happened. All they're doing is just they're using little bits and pockets of knowledge and connecting dots, right? We're going to change that for you. Where you're not that person just connecting dots all the time. You know what's happening in the market. Okay? So, excellent. So far, so good. I think the way we've been doing the videos, the way we've been seeing progress and everything, I think you guys are doing okay so far. If there's any questions, please use the comments in below the videos. However, repeat after me one more time. This is not hard. This is easy. Again, this is not hard. This is easy. Okay, we're gonna make you skilled and give you the mastery you need by the end of this course. Let's continue to the next lesson, which is trends. Okay, so now we're gonna be discussing trends. Okay, trends have a very common characteristics that always show up. So this is pound Aussie on the daily charts. Okay, now trends have this tendency of making higher highs with higher lows. Okay, so now let's go into perspective of what's a higher high, what's a higher low. Okay, so let's start from here. Okay, as this sideways slash sellers died out and the buyers start kicking in, let's go into what's a higher high, higher low sequence. So we got a higher high sequence coming in here, higher low sequence, higher high, higher low, higher high, higher low, and then so on and so forth, right? Now let's get into some nitty-gritty stuff. So as we're going for buyers and sellers territory, using trends is quite beneficial to find out exactly how you can pick up trades as well. Okay, because trends generally have pullbacks. Okay, and when a pullback comes in, you watch the momentum. You watch the momentum. It's not a 50% pullback. It's not a 61.8% pullback. For God's sake, please. Whenever I hear stuff like that, it's like, please stop that. Trading is not that simple. It's not that easy. If it was that easy, then we wouldn't have this case of 95% losing, right? So, anyways, we look at this going north, going north, going north. Finally, it halts in this area and it officially breaches. Once it breaches, it holds above the zone, holds, goes higher. And I want you to think now, when he went higher, did he stay above this dotted line? No. He came right back. So the line could have gone there, and then when it comes right back, it's like, oh, maybe not. Then he tries to breach it higher. It's like, that's not a higher high either, because he comes right back down. Then he tries to go up again. That's not a higher high. It comes right back down. So this line never got broken, which means the purple breach stays here and the guy responsible is down here. Now, in this context, here comes the buyer's reign ends and here comes the sellers. Now, in this sequence, notice how the overall flow is the buyer's territory, right? And generally they like to use support equals resistance. So this is really far away from support. This is really far away from support equals resistance, but at the same time, the strength of the movement is so strong. Look at these. Look at how big these green candles are compared to the previous downfalls. They're very powerful. So we're watching this very carefully. As the sellers start to come in, they start dominating here. Seller 1 gets this far, pulls back 80%. Seller 2, no lower low, comes right back inside. Okay? Comes right back inside. And notice as he comes right back inside, notice this purple, this orange line. Notice this orange line. Is this not still the same area where we're saying that this is the line for the buyers? So it's in a mini buy zone anyways, where it looked like sellers were stepping in. They didn't step in. They didn't step in. They came right back into this area, giving you a heads up that this could still be a long. This could still be a long, and that's how your longs generate from that area. Now, bit complex on this one. It's okay. We'll do more examples. That's okay. So trends. Now, let's reverse it to the other side. So let's say this trend starts to roll over. It goes into a range, blah, 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 and then it rolls over to the sell side. Okay? That's generally the concept of a trend. He goes in one direction, halts for a bit, resumes, or turns around. Okay? So that halts for a bit is generally the range period or the squeeze period or the channel period. That's all the halting period. Okay? So in this case, the market is trying to turn around. And as it's trying to turn around, we're looking at this. If I was to just look at this scale here, I'm not looking at this overall move. For the sake of just this trading example of what a trend is, if I look at just the scale here, notice how we go down and we make lower lows from this area, right? If we go down to make lower lows from this area, generally the concept is that area should hold, okay, as support equals resistance, okay? Because this is different from a channel. This can come up all the way this high, and it would still be a downtrend if it was a channel state. But it's a trend state. It's a trend state. So trend states operate a little bit differently. They have the tendency to go further as well. Okay? So in this particular case, if we go into the nitty-gritty of things, where it's the complete details of everything, so we're going to see sellers come in, halt, breach. Okay? Here's a breach right there. They go down, they hold a bit, breach again, hold a bit, breach again, hold a bit, breach again, no lower low, so that's not a breach. So we have some breaches here, we have a breach up here, and then, but if I go like this, from the last breach, if I go straight across, wait a minute, price never held below. They just keep coming right back, right? So we're going to put the line at the previous breach, which is right there, and say that seems to be the guy who keeps holding the market, and here is the guy responsible. Okay? Plus, we're still using support equals resistance from this major support equals resistance here. Okay, so all in all, when we look at this, we're like, okay, here comes the buyers in the seller's context. Buyers, pull back buyers, halt. Comes crashing down. He breaches all that area, but he's still above this zone. Pulls back, comes down. Okay, sellers are coming in now. Buyer takes one more try. No higher high, comes collapsing down, tries again, collapsing down, here comes the seller. So when you look at it like this, you're trying to see, how can I time this at the right moment? How can I time this at the right moment to get in at the right moment? Right? Because so you want to look at this very, very carefully and see, well, where is the moment for me to get in? Okay, so that is a trend in this case. Let's do some more examples. We'll get into more details, and I'll see if I can get one oddball in there too, like I did with the other examples. If we can find an oddball, it'll actually make you better. Trust me, it looks difficult now, but it will make you better. Okay, so on to some examples. Okay, so in this particular one, we're looking at pound CAD at on the 240 charts, which is the 4-hour charts here. Now, let's take a look at this before the uptrend begins. Here was a downtrend coming in, and as the downtrend starts to die out, okay, coming down, no lower low, and then finally a higher high sequence starts kicking in. Now, as the higher high sequence kicking in, look at the retracement on this first higher high. Notice it does not stop at SNR. Okay, he goes deeper. So it starts off looking like a channel, but then eventually once he goes higher and he breaches and makes new highs, it uses that high point as your support equals resistance. And that's when you know a trend is strong and there's activity, okay? Because trends are pretty good, and trends pretty much give you decent trades and decent wins, okay? So when you identify trend moments, you want to keep an eye out that you want to make sure it is a trend. You want to make sure of your momentum capabilities are at utmost mastery. You want to be on top of your buyers and sellers needs to be at utmost mastery, so you can be able to ride trends. Okay, because trends, like I said, they are like the big payouts. Okay, so in this particular case, let's go through this as the buyers begin their initial move. Okay, let me delete this and we'll start with, as they take their descent off, we go higher, chop, breach. As it breaches, it goes higher, pulls back higher, no higher high. Notice if I put my line right there, no higher high. So the guy who did the breach is just here. Okay, it's still here. And the guy who's responsible for all that is here. Okay, I can just imagine you guys, a few weeks from now, you're like, all you're thinking is, where's the breach and who's responsible? It's just constantly, who's responsible for this mess? All right, so anyway, so there's the guy who's responsible and there's that breach, right? So we're like, okay, this is all buyer's territory. It doesn't matter how deep it comes in, it is all in buyer's zone. So when we look at this in buyer's zone, we're also watching the momentum fade. Okay, sellers come in. We're going to use a dotted line for this. Sellers come in, halt. Breach happens. We're going to use this line for the breach. And after the breach happens, it holds here, tries to make a lower low, no lower low, comes back up, tries to make another push. This time, not even a equal lower low, and it rolls over to the other side of this. If I drag this across, okay, now it challenges that high who's responsible, and he's right up there and he's holding until one candle pops out. Okay, that's your first initial sign of it's go time. Okay, your first initial sign of it's go time, because the long is resuming. The buy kicks in, the long resumes. You're looking at this long as, okay, buyers, mini halt, stronger buyer, mini halt, even stronger buyer, medium halt, and then from there, is there a higher high? Let's try to draw this across. Is that really a high? It was when it came out, but then it came back in. Is this a higher high? Well, it was when it started to come out, but then it never came back in there. So it's like, is my line right there? Is that the containment part? Let's take a look at it carefully. If that is going to be my containment part, it is the first breach that came from here. Okay, if I do my first breach that contained from here, here's the first breach that goes north, pops down, and then he never makes a higher high since then. So we're gonna precise this, drag this across, and we're gonna say that, okay, well, that looks like the case there. Now, if that's the line right there, how is it possible the market came all the way down to this low, used the support resistance, and kept going? How come this breaching area and the guy who's responsible doesn't make any sense? Let's do it again. Let's do it again. Let's start from the buyers from where they began. Buyers pulls back. Buyers, not really a higher high, but it holds and it breaches. Line goes there. Buyers pull back, breach, line goes there. Now that it's breached, it reached this high point, and then since that high point, okay, everything else, we're just gonna put a line from that high point and take it across and say, did we ever make higher highs? So we had the first attempt to make a higher high to this spot, and we had no higher high. We had the next attempt to make a higher high at this spot, no higher high, but it didn't come back down as much. So there's the tricky part. Third attempt to make a higher high, didn't come down. How are we going to know if this line needs to stay here or not? Okay, here's the thing. If this is the breach and the breach doesn't move higher, you need to put this together with the momentum. Look at how the momentum goes up, slows down a bit, goes very strong, slows down harder, weakly goes up very slowly, barely makes a higher high, rests 50-60%, drags its way up again, no higher high whatsoever, rests 50% again, one shot, one last push, no higher high, and collapses to 120% fail. This momentum sign shows you that from this moment onwards, no highs actually happened. It just dragged into this little, from an uptrend, a mini uptrend, to a mini channel, to a mini range, to a mini death. Okay, and the overall flow says, once we breached this high, our line was here, where our dotted line is as well, and that all ends up being the buyer's territory. Okay, now into this buyer's territory, you fade out the sellers, and as you fade out the sellers, your buy resumes. Okay, so in this case, sellers, slight pullback, bigger seller. It starts to get some momentum here, starts to get some slowdown here. We're gonna put our mini line here because we're now stalking sellers. Now as the sellers come down from there, sellers come down from there, they make this low, but no lower low after that. This is all sellers territory until they come up to here where they challenge that high and they pop out with one more candle. This becomes your buy zone. Okay, and then when that buy activates, you have that nice big winner, because there's more information of why this becomes a bigger winner compared to anything else, because there's something more to the left. This will come into later courses on how to find out how you can trade on your time frame, but you can milk a bigger time frame. So we'll go into all of that details and stuff. That's a little bit more advanced. We'll get there later. We're just scratching the surface of clearing out the fundamentals in the air to make sure the core concepts are solid. Okay, so moving on to some examples. Okay, so let's take a look at Canadian yen on the 4-hour charts here. Now, I'm going to throw in a tricky one here. Now, this is also a trend here. This is a downtrend we're working with. Now, as we're looking at a downtrend, let's first look into where the downtrend began, and it began somewhere in this zone here. So as the downtrend kicked in for the very first time, it pulls back, and then he goes down, down, and down, and he does all of his breaches, blah, blah, blah. Once he does his breaches and he comes down, we start marking our territories and be like, okay, sell zone, sell zone, sell zone. All right, in this sell zone, now watch carefully how the buyers come in. Now, when he dropped from this breach, what's the lowest point? There. Prices haven't gone below ever since when they started pulling back. Who's responsible? This guy. Now, in this process of who's responsible and everything, notice how price goes up and starts to weaken. As it starts to weaken in this area, sudden boost of energy. Okay? Keep this in mind. The guy was completely weak, the rubber band man, as he was going up in this entire process. Now, you got to stay aware of this information. He was weak, lots of rest. Barely made it higher, lots of rest. Barely made a higher high. In fact, didn't make a higher high. Rest, 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 rest. Tries again, more rest. As if he quit. But then suddenly he gets this boost of energy and you're like, what in the world? He breached this high. Not only that, for 2 candles, which is 8 hours in this particular case, he held in the zone of the challenge area. And it almost looks like, is that above? And then the third candle comes crashing down and news comes in where you have only a 4-hour window left to say, this is it. This is it. 4-hour window left. Okay, it's a 4-hour chart, so you're obviously going to have a 4-hour window left saying that I got to get in from here. Your stop loss is obviously going to have to be up here in this zone here. Okay, and aggressive entries right there. And it looks like, well, he's just going to fly down from here. Like, it doesn't look correct. Right? So, this is a very tricky one. Also a trend style, because not only is it challenging a trend, but it's also challenging a channel. If you were to look at it in a channel state of mind, it's also challenging that. Okay? So if you look at this on a larger scale, yeah, this is support equals resistance from here. It's like, okay, well, on a larger scale, as a support resistance there, this thing just looks like 2 candles going up and going down. Okay, if I was to move this up to a higher time frame, that's what it will look like. Maybe even just a wick, just popping up and popping down. So it never happened. But on this time frame, it's scary. It's like, well, what is that? So you have to read this story very, very carefully. Very, very carefully. So let's move on to the next one just below it. Okay, markets come crashing down from here, breaches this whole spot, comes all the way down to here. And now from here, no lower low has happened ever since. Until sellers, big retracement, sellers try again, retracement, sellers try again, retracement, sellers try again, dead. That means buyers have begun. Buyers go up, they breach this area. Let's put the dotted line. Buyers have begun, they breach that dotted line area. As they get up to here, they try to go up again, no higher high, stop. No higher high, weak, 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 and then comes down the collapse. Okay, now the collapse is coming in hard, just like it did earlier here. It just keeps running away. So it's not like here there was a collapse and then it goes up one more time to try, right? But here there's a collapse and it's just dropping. It's dropping like mayhem. Because there is one more piece of information that's overlooked. You see this candle right here, where it's just green, and prior to that was also green. but there's something odd about it. It's because a weekend gap happened here. Okay, once a weekend gap happens like that, you're bound to get different types of players coming into the market. Different people, different folks, different investors. So you got a slightly different outlook coming in with a fresher mind. Okay, so when you look at things like that and you see a massive move downwards, it might be tempting to jump in early, or you can start to say, well, if he again doesn't make a lower low, maybe it's going to turn into a range. A range in the context of a downtrend, right? So now you're using two concepts together. Okay, so when you, So when you look at this further, he starts to pull back, and in this pullback, this is as far as he can make it before he starts collapsing again. And that's when your reign ends for a pullback. Okay, so two opportunities. We got an aggressive opportunity by joining the market there. We got a conservative entry by joining the market there. Okay, this is actually not conservative. It would for me, it would classify as more risk, because we got this area down here as, what if he smacks it back up? Again, like we discussed in previous videos, you're gonna be right, but are you willing to take that risk to be right? Or will you have that patience to wait through it? Okay, so the best ones that I personally like are stuff like this, that do the nice rollover, they reattempt, and then they crash, because then you get the lowest risk to reward, the lowest risk for the highest reward. And stuff like this, it almost feels like you're chasing it at times in this 4-hour window right there. And then also in times like this, also feels like you're chasing it, also 4-hour window right there. Okay, and then finally this one also seems like you're chasing it in less than a 4-hour window, but high risk because you're just at support. Okay, so stuff like that. In fact, this trade would be down here because the dotted line is up there, right? So right there is your entry. Okay, almost feels like participating, not anticipating, because you're getting a price after a move is already undergo. So these are more complex and rated as higher risks. Okay, so this is a trend that we had a tingling that, what if it's a range, where it's still in a trend. And again, if you keep looking at it, it's actually still within that boundaries of all within the seller's territory, right? So this high movement coming in might make majority of the people start thinking, oh, it's a buy. It's a buy. So buy goes in, slows down, buy goes in stronger, slows down a little bit more. Or watching this carefully, we're going to put the line for the buyers now and say, let's take a look at this one. The line is here because we haven't made a higher high yet. Going further, okay, higher high breach happens. Put the line here where he's going up to challenge these guys again to see, because he's the responsible one. I didn't draw that. He's a responsible one. Goes up to challenge him. We're watching this guy is very, very strong, this rubber band man. He's coming in hot because there's no higher highs from here now. He's coming in hot. He's still in the buyer zone. He struggles on its way up. Struggles again. He's coming in hot. As he starts to breach, we're looking very carefully. Is he still gonna hold in this area, or is he gonna drop? Okay, what would you say at this moment? Now, these are 4-hour candles. Imagine the time and patience required to unlock this information. You got to be very, very patient. What's going on in your mind right now? You're looking at this as an overall sell zone. Okay? Prices breached this breach line. They've gone higher, but they haven't breached the guy who was responsible. So you still know it's in the seller's territory. On the miniature scale, this is all in the buyer's territory, and it's not making a higher high for the longest time. No higher high. Let's draw in the line from the upper side. No higher high, no higher high, no higher high. So comes crashing down. You're looking at this very carefully and be like, well, what do I do now? Okay, think of the answer you have in your head, and I'm going to play this forward. Okay, now I want you guys to think, whatever the answer you had in your head, was that right or wrong? And if it was right, pat yourself on the back, obviously. If it was wrong, think to yourself, what was the main piece of information that you missed? Okay, so just to help out with that, for those who might have got it wrong, in case you got it wrong, there's no problem about that. This is learning. We're learning anyways. If you got it wrong, when you have a situation like this, always side with the bigger move, which is, in this case, this fella. Okay, always side with the bigger move. That gives you a better understanding. Now, once you get onto this area where he starts to challenge these guys and starts to breach it, don't forget, as the buyers come up, pulls back, buyers come up, rolls over, buyers come up, no higher high, collapse happens, the line moves here. And all of this price, let me move this line a bit, and all of this price that keeps holding below that line tells you, now not only do you have the big boy, but you also have the miniature cell saying, we're also good to go. Okay, and then the wave begins, very, very strong, and you're looking at this as, I know it's an overall trend, let me focus on the trend on the miniature scale, and I know we breached this area here, support equals resistance, it's still a trend, lower highs, lower lows, and as it pulls back, I'm watching it carefully, it's pulling back hot, I can't read my buyer's momentum yet, all I see is one strong move up, I can't read my seller's momentum. All you see is move down and an immediate push back up. What's going on? The collapse goes further and further and further. Okay? You can pause the video and think to yourself, how would you have traded that one as a trend? And if you're thinking this is also a trend trade, do not do trades like this. This one is wrong. This one is high risk. But do take a moment, pause, and think about this one. How would you have done this? What clues were present? Okay? All right, let's move on to the next example. Okay, so here's another example of a trend and also a trend trade. We're going to do both. This is Euro Pound on the 4-hour chart. So let's start looking at this, and this is in a buy mode. So as the buy begins, we're looking at a uptrend coming in here. So this uptrend that you see here was preceded by this miniature downtrend here. Now as we do that, an uptrend process is a higher high, higher low sequence. So the first thing we have is a higher low. Okay, once the higher low is confirmed, he makes a higher high afterwards, giving us an idea that, okay, we're possibly in a trending state. What else gives it away that's a trending state? Look at the movement of this. Look at the movement of this. You're like, whoa, okay, he's speeding up. Okay, we're gonna actually be covering this also in the next lesson of the strength of the legs and stuff like that. I don't know if in the upcoming lessons actually. So let's take a look at this in detail. So as the market is pulling back, we have a breach to the north, slight hold, goes higher, slight hold, goes higher. So we got a breach above this entire zone basically. Okay, and who's responsible for all this? The guy down here. Okay, so we got this massive support equals resistance, but at the same time, this massive buyer's territory. Okay, now in all the sequence, if we follow, even we put our line above the red guy if you want, and say, oh, maybe that's the guy because we never made any higher highs afterwards. So if that's the case, we want to see when the sellers come in. Okay, it's not just that's the pullback, hit the buy. No. When do the sellers actually come in? The sellers can only come in when the buyers stop. Make sense? The sellers can only come in when the buyers stop. So let's take a look at the buyers. Here's the buyers, slight pullback, buyer again, deeper pullback, buyer again, no higher high, 50% pullback, buyer again, no higher high, dead, collapse. Here comes the sellers. Pull back into it, sellers dominate. So if you were to watch the sellers again from here, say that's the seller coming into here, what kind of retracement is this? Is this 90%? He makes a lower low, but does he make a lower low? Because he climbs right back up. Did he ever make a lower low in this whole area? Okay, so after 80% retracement, he attempts to go down again, but he comes crashing right back, telling you that that might be my moment to hit the buy, because we're working with what looks like a range in our context of a trend. So we want to activate our trade as close to the bottom as possible, right? We went through this, right? So when we want to hit the buys is as close as possible to here, but then we see we don't make higher highs. And we make money, but we don't make higher highs. So we don't actually mint the trend. But it means one thing. The game is still on. We made money. We had to exit early on this as the market started coming crashing back down. We're like, that means the trend is still pending. The range is still active. Let's follow the buyers and follow the sellers back again, and let's see what's going on. The range is big enough for me to read all momentum. The trend is big enough for me to say we're well above the buyers in the buyers area, so no problem. So trend is still very healthy, right? Because it's not even pulling back as much. It's very healthy. Okay, so we're looking at all the stuff pulling back. Very deep retracement, 90%, drops hard, and then 90% again. It's like, could that be a lower low? Did he actually even make a lower low? Putting the line right there, and we're questioning that concept. Comes back around, holds, drops, makes a lower low, so the sellers are still around. Okay. Now that the sellers are still around, we're looking at this as when are they gonna die? Because we have our original bottom of the range here. Okay? Let's watch it carefully. 2 times it hit 90%. After that, he struggled to make it down again. See the struggle phase? Okay, keep that in mind that we did breach below this, but are we actually below it? Okay, look carefully. He breaches below it, he jumps right back in. Okay, he breaches below it, jumps right back in. So let's draw the miniature ones here. I'm going to change the colors. I'm going to put the color here, and I will make it, I don't know, pink. No, pink's too bright. Let's make it pink. Who cares? Okay, Mr. Pink here. All right, we're gonna make it a little bit thicker as well. Why not? Boom, so you guys can see it a bit. Okay, let's move it out. All right, so we got that pinky line right there. Okay, after the breach happened, he tried to come back up, still seller's area, went back down, tried to come back up, still seller's area, went back down, breached below. Now he's breaching below in the seller's zone, but he's fighting it on the bottom of this. Now, here we go in the same phase again, and I'm going to ask you a question, the same question I asked you earlier. Who's going to dominate? The pink one, the orange one, the purple one. If you were to rank them in the power, which one would be the weakest? Which one would be the strongest? Okay, so this thing is a miniature one that just began. This orange line is a major one that's been running for some time. This purple line is the Godfather. Okay, if you guys had the exact same answer as exactly what I said, including the Godfather, you're on par with me. Good job. Okay, so moving forward, He fights in this area. Now this area starts to look very interesting to you because you know it's a range, you know it's in a seller's area, but you also know that, man, this is at the bottom of this area as well. You dive in to take that risk and you're like, you know what? I'm going to attempt this risk. You hit the buy and you see what happens to your buy, and your buy fights it. This is 4-hour charts. It takes a whole day, and on to the next day, you're still holding it and you're seeing, well, where am I going to end up with this? The buy is still on, the top of the range is still here, and you might be thinking, well, should I exit it there, or should I see if this guy comes back to life? You have an option there. You can close it, take your money. You made your money twice like that now. Or you can still keep an idea of, well, what if my trend is still alive? Let's take it a bit slower. Here's the momentum. Here comes the buyer, pulls back. I'm going to use this pink line. Here's the buyer, pulls back. First higher low sequence. Okay, it's not really a higher low, but you can see that's he gets snapped up from here basically. But forget it. Let's say it's not even a higher low. Buyers push up here, 99% retracement. We're like, oh man, this buyer sucks. Inches his way up, inches his way up. Boom. Finally gets the courage to say, I'm going to do this. Once he gets up there, we're like, well, he was looking very weak and he had a 99% rest. He must be faking it. He must have just have been on some steroid or something. But then his rest is like fighting and fighting and fighting. It's like he doesn't want to rest. So we're curious now. We're curious now, which is the reason why we're thinking, do we hold on or do we let it go? Let's move it further. Notice his run up again from here. Strong or weak? And the market starts to collapse from here. Now this time, he's no longer above in the buyer's area, but he's above the guy who caused this. Right? Here's the breach line, is that pink line, and the guy who was responsible is that circle. Again, bottom of the range again. Bottom of the range again, which means at this point, two things might have happened if you're holding on. One, maybe break even. Okay? Maybe break even, you moved your stops to 0. 2, it's not the trend and you're like, I'm still going to keep trying to buy it when the time is right to see if I can still hit it for the trend. So you're still watching it and you're like, well, is that sellers? Let me see how the sellers die out for me to understand, okay, here comes the buyer again. He's on the other side. If I were to follow it like a sell, here's the breach for the sell side. No lower low, no lower low. Boom, he's onto the other side. He's going to go up to challenge that guy, but we don't want to activate our trade up there because we're in a range. So we're taking a risk yet once again. Notice this risk is higher than all the other ones. So money management needs to come in. Money management. You look further, the market starts to hold, pulls back in deeper. He comes right back down to the bottom of the range. Stop loss? Is that a buy that you do there? Is that a stop loss that happened there? So what happened? Is this pink line saying that everything was still in the seller's area, the buyer never fought it? Is it saying that the guy who took the risk up here lost the risk? So 2 positive trades, 1 negative trade. And the trend still holds on because the game is still running, right? So the sellers come into here, chop, 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 retrace this high. Sellers try to push again. Is that a lower low? Well, so far it isn't. Let's keep going. He comes lower. He's coming down to challenge this purple line now. Sellers still dominating. They've actually picked up steam. Watching it more further. Here comes the buyers back in. So you can, if you extend this out, be like, is that below the range or back in the range? If it's back in the range, where would you activate your buys? When the sell happened down here further, did he breach this zone here and hold below? Yeah, he came down to here and he started holding here. In fact, the line should be here. He started holding here. And then he broke on the other side. But when he broke to the other side, don't forget, he's responsible for that breach. He even broke above that. Now, yet once again, you're in the middle of the range. You're not in the corner of the range. You're in the middle of the range again. And you're like, I had 2 wins. Okay, probably 2:1 ratios. 1 loss. And I'm still looking at this as there's a big buyer in here. So you're like, okay, I'm going to take that risk again. But this time I'm going to watch this area a little bit more carefully because psychologically I'm messed up right now. Because last time I was holding on. Look what happened to me, right? We have a whole course on psychology and how the brain works. But at this moment, we're going to just stick to, we're watching that area up there, but we're in the buy right here. Move it forward. Buyers are very, very strong. Every 4 hours, they keep rising higher and higher. We reach up to that area and we start playing chicken up in that orange line area. 3 candles, 4 candles, which is 12 hours, right? Right? 16 hours with 4 candles for 4 hours each. 16 hours have passed by and you're scratching your head like, what do I do? What do I do? I'm positive. I'm making money. That's not a problem. But it's not about making money anymore. You've stepped up your game to, it's not about making money anymore. It's about, can I get this? Can I solve this equation? Can I solve this dilemma? Can I master and pull out money, more money from my analysis? Okay? So we're watching this area carefully and you decide, okay, at this point, you know what? I'm going to remove half my money because you have fear of this previous time. So you remove half your money and the fear is so great that you even move your stop loss to 0. Okay? So stop loss to 0, you remove half your money, you're like, good, I made something. I made some money. You're holding on. The blast happens. Buyers are very, very strong, but he jumps right back in and you're like, do I close it now? Is that a faker? Dilemma. Let's look at the momentum. Buyer slowly creeps in and then jumps hard. Buyer rests 5%. Jumps hard, but then he rests 90%. You give it another candle, and the rest is dropping. And now you're thinking, should I close it? And as you think, should I close it? The buyers start to kick back in, and you're wondering, does my pink line go here now? Okay. Are we holding, maintaining grounds to go north? Is my trend finally alive? And the move starts to happen. Okay, so this example was a little bit more in-depth. Okay, because you're in week 3 now, and that's why I'm trying to open up a little bit. I'm trying to extract your brain to think more, think and tickle your brain with, did you put in all the information from the previous weeks? Are you connecting all the dots together and be like, wait a minute, it's all making sense now. I can see where my mistakes in my previous trading might have been happening. I can see where I can improve on. I can see this is not difficult. This is easy. Right? All right. So very good work with this entire states and everything. You are on to the next week now. So let's catch up again in a week's time and we'll start your next lesson. All right. Welcome back. Now, what we're going to be covering here is actually one of my favorite topics. It's called money spot. It's a word we've given it at Forex Watchers and Urban Forex. And what we're going to discuss about the money spot is how this little illusion, and we're going to get into why it's an illusion, is very, very interesting because that money spot is actually the golden key for us. Okay, so of course it's not the golden key on its own, but it is one of my favorite topics that I like to discuss and share with you guys here. So we're looking at the Euro Aussie on the 4-hour charts. Now take a look at this. Now if I was to say you are simply looking at the markets from this line and to the right, okay? You're only looking at this piece. Okay, so the one on the left doesn't exist. And you're looking at the market coming down. It's in a downtrend, right? Coming down again, pulling back, coming down again, pulling back, da-da-da-da. It reaches down to here. At this point, you're aware that, yes, all of this below here is seller's territory, right? Now, what happens in this flow is, just like we were saying all of this is seller's territory, someone is looking at this as here comes the buyers. Buyers, pull back buyers, and this area here is in buyer's territory. Okay, see how the market just holds above that S&R sort of area? For them, that's the buyer's territory. We call this the money spot. To some, it's an illusion that the uptrend is going to continue. To some, it's an idea that they're almost out. They're almost out of steam and we need to resume the downtrend. So the moment where it looks like both a buy and a sell, that illusion is called the money spot. Okay, so let's get into some more examples. We can look at it just by this moment right here. So let me delete all this. Okay, as the market comes lower down, you can see that he never made a lower low. Okay, let's put the line here. So it was here initially, right? It was right there. Then he came down, he held up to here, and then he broke below it. Okay, when he broke below it, he came back. Okay, he held below it again. So let's move the line down here. Okay, so that's the new low. Coming down, holds below, doesn't make a lower low, goes up, comes down, goes up, comes down, doesn't make a lower low, goes up. Okay, so in this whole process, this line maintains grounds. Now, when we look at how this line maintains grounds on our upper end, we're starting to see, okay, we have one high here, but then this is a lower high. So we're like, what's going on here? The market's unable to go below this price. Okay, every time it goes below that price, it comes back. Now, you have to be very careful to understand what does it mean to come back. Okay, because this is a 4-hour chart. This is a lot of candles for you to be patient with. Okay, if you're being very stingy with time and saying, well, since I'm here, might as well take a trade out of this. No. You need to have patience. And I have some more courses based on how to deal with stuff like that, where it's the turning point for a lot of the students. We're like, oh, okay, maybe if I just did that little trick, my profits increase, my workload decreases, and so on and so forth. So we'll get into all that stuff in a different course. But for now, what we're gonna do is we're gonna keep looking at this area carefully, as all of this is money spot. Okay, let me get the line out here. All of this is money spot. Okay, this is all seller's territory. Who's responsible? As you know, it's this guy here. Okay, he's responsible. So now, as you're seeing this all of the seller's area, he comes up, challenges, drops again. Comes up, identical highs, challenges, drops, holds, drops, holds. So it's starting to turn into a range now. Now, in this process of even a range, okay, few things happen. Okay, as the market comes up higher and higher, and he holds above, this is buyer's territory, this whole area. Okay, as he comes up again, and then he starts collapsing down into here, this is still considered buyer's territory, but it's a different opinion now. This happens to be the money spot yet once again, because buyers are still looking at this as, oh, pull back, support equals resistance, buyer's territory, let's keep hitting the buys. Okay, sellers are looking at this as it's the top of the range. The sellers just came back, they dominated. So we start to develop the money spot momentum area here. It's the idea of a money spot. And generally after a money spot, the market starts to move. Okay, that's the moment where it becomes really hot. Okay, so let's take a look at some more examples in the next video. All right, here's New Zealand CAD on the 60-minute time frame on the 1 hour chart. Now, take a look at this area here. I get this question a lot from a lot of the students that come to me. It's like, hey, Naveen, I've mastered trends and direction after learning from your webinars and stuff like that. But how do I know when is the right moment to pull the trigger? You know, timing. Timing is a very, very big question for many of the people, because they're like, I can gauge the general idea of where the markets are going, but I can't time it right. Well, getting the direction right is one thing. Okay, that needs to be mastered. As the absolute basic mastery needs to be done. Then getting the timing right will determine how much money you're going to make, or in fact, you might even make a loss if you don't time it right. Okay, so for example, if you can see this is a downtrend and you hit the sell here, or you hit the sell there, you can see how this last spike can stop you out before going down. And that can feel like, oh man, like, can't believe I have bad luck. Okay? And the other part is, let's say you do hit it there and you keep your stop losses very wide, but then seeing the market chop around for that long might make you think, I guess it's gonna go up. Okay, that happens, it's normal. This is a 60-minute time frame, so that's like 6-7 hours into it. You might even sleep and wake up and you're like, it's not going anywhere. And then you might end up closing the trade to later find out it drops. Okay? And then this can start creating fear or greed, you know, psychologically speaking. So let's go into how a money spot comes in handy for situations like this. Now, for those of you who've already done all the previous weeks, you obviously know that, oh, wrong one. You obviously know that this thing is running in a downtrend, right? You guys can see that now as he comes crashing down here, he breaks these barriers here and he starts to maintain below there. So let's put in the line there. Boom. Okay, I'm doing a broad overview, like he's in a downtrend below this entire zone. Okay, I'm not going with the nitty-gritty here. So he's in a downtrend below that entire zone, and as this overall buyers come up, like here, pull back, here, pull back. Notice after this point right here, here's a higher low area. But after that, he never makes a higher high. He just keeps going higher, comes right back down, goes higher, comes right back down. So this starts to become money spot. Okay? To some people, that's a buy zone. And for these folks, it's a sell zone. Okay, and we're going to get into time frames in a bit, but what I want you to get in a habit of doing is watching these again and again. I'm going to give you example after example after example until you start to get the hang of what in the world is a money spot. Okay, so the money spot again is an illusion of the market wants to go in one way when in reality it wants to go the other way. Okay. So that has a lot to do with being aware of your surroundings and stuff like that. We'll get into all that in a bit. So the market keeps going down, lower lows, lower lows, lower lows. If you were to take it even at this nitty-gritty concept right here, after he broke below, he never went lower after that. And as this thing starts to come up, this all is buyer's territory for these guys, right? They're looking at this as buyers, pull back, break higher, and hold higher, buyer's territory. So that's a buy signal for them. And over here, everyone's like, well, anything below this is a sell. Even anything below this is a sell. So they watch. Still holding. It's still buyer's territory for them. Right? But they're watching. It's the current market now. So maybe I'll have to update this for you guys later on. But that's pretty much going to be pushing towards the sell side. Because all we're watching is the buyers die out. Once they're up in this area, yes, it is buyer's territory, but then once he does this, he tries to make a higher high and snaps right back down. Okay, it's like he lost momentum. And now we're trying to come down, crashing down. Look at these red bars recently. Getting more and more aggressive. Okay, so these are money spots right here. This is a money spot. This is a spot where everyone just generically will hit the sell right there. Again, wrong icon. Sorry. I'll just bring this one down. They'll generally hit the spot right there because they're going with, let me take the easy route and I'll just put my Fibonacci's and stuff like that. And 61.8% from here to here. Or if I plot it from here to here, that's a 23 point something percent. So sounds about right. Hit the sell and then leave it a rest to psychology and crossing your fingers and praying to God, right? So don't do that. Don't do that. We're better than that. We're smarter than that. You know, we came out of the Stone Age and the Ice Age. We can think a little bit more. Let's not be lazy here. Okay? So, and that's why I'm here. So I can train you guys that there is a better way. It doesn't mean a harder way, but it also means it does require a little bit more effort, but I'll get you through it where the effort will seem meaningless. Where it's like, okay, I'll do it because it's not too bad. All right? So more examples. Let's go for more examples. Okay, so different currency, different time frame. We're gonna do money spots after money spots after money spots. We're gonna master observing and spotting these locations. Once we master them, we're gonna go into how to tackle them. Okay? First let's get a mastery of identifying them. So downtrend resuming here. In this downtrend, here comes a little uptrend here. In this uptrend, as the markets go higher and higher, this zone gets drawn out as that's the buyer's territory. He goes higher as the market breaks above and holds above buyer's territory. But this whole sequence is below seller's territory. Money spot. Money spot has all the steam. Okay? Let's take a look at another one. Now, bigger overview. You've seen the little nitty gritty. Let's zoom out a bit. Okay, we're gonna keep the same chart, but I want you to look at it in a different perspective. A massive downtrend coming in from here. Downtrend pulls below it, holds below it, goes below again. So your SNR line will go here, basically, because that it breached below and it held below. In this zone, here comes the buyers, pull back buyers, 100% retracement for that buyer. But still in a buyer's territory, right? Because once he breached above this area, it's like he never made a higher high right there. He never made a higher high because he came right back down, but he never came right back down because he went right back up. So it's like, is my line right there? Well, whatever the case is, to the seller's eye, it's like, hey, the buyer quit. Look how weak he is. To the buyer's eye is, he came this far, but then it's a faker because this is all buyer's territory anyway, so it's okay. Right? So there's two obstacles in this area, and this area starts to generate the interest of money spot. The illusion becomes real. Okay? In the money spot and right after the money spot, momentum begins. Okay? Let's take a look at some more other ones. Here, buyer's territory, all of this above here is buyer's area, right? In a larger scale. Here comes the sellers coming down, pulling back, coming down, pulling back, coming down. The line starts to develop here. And then he goes lower. It's like, okay, he seems to be holding lower. Let me lower this. Right there. Because he doesn't go higher. He comes right back down and everything. So it's like, okay, seller's area. Buyers above this red line. Sellers below this little red line. Puts you in a spot of money spot again. Okay, right after the money spot happens, the movement begins. Okay, so let's switch currencies, switch time frame, take a look at some more examples. We're gonna do this a few more times until we get the hang of where exactly are these. They're usually turning points. Okay, they're turning points of the market. Okay, so here's the euro pound on the 5-minute chart. Now we're down on the 5-minute chart to show you that there's even money spots here. You know, I wanted to make sure that it's clear that it's on every time frame. The illusion exists on every time frame. So let's take a look here. Markets are going down, 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 holds below this area. Okay, seller's territory. If we look at the nitty gritty says buyer's territory for this little moment here, right? Up here, pull back, holds, holds, holds. They're looking for buys while these guys are looking for sells. So we got the money spot there. Looking for the next area. If you take a look at this area here, this is a very good area here as well. The markets come below here, they hold, they drop lower, but then they never go lower because they come right back. Okay, so it's like, okay, well, if this is the zone here, who's responsible? This guy is responsible, right? So it's still in a sell zone. And if it's still in a sell zone, then all of this up here is in the seller's territory, right? As the buyer comes up, pulls back, comes up, and then 120% retracement, that's like, hey, the sell's back on. But for these buyers, it's like, well, all of this above this line is actually buyer's territory. I don't know why this thing keeps coming. Let me clean it up for you guys. Okay. I found a bug. All right, here we go. So for them, it's like this is all buyer's territory, so anything doesn't matter. It's all buyer's area. So all of this zone here starts to become like money spot again. Okay? So even in the market turn, every moment when there's a money spot, the market begins to move. Okay, that's the most important timing aspect of things. Okay, so what we're gonna do now is we're gonna take it a step further and be like, okay, well, if that's always gonna be the issue, how do we deal with it? How do we deal with it? And the answer lies with time frames. Now, time frames, we're gonna be discussing in a bit, has a lot to do with understanding of how you want to trade. Without knowing how you want to trade, time frames have no meaning. Okay? If you're simply looking for stuff and jumping time frames, then you will eventually find what you're looking for, which is something to do right now, and that's not proper trading. Okay? If you're doing proper trading, you need to understand what kind of lifestyle do you want from trading? Why are you even in this industry? You need to answer that question first. Once you answer that question down, you start to understand what time frames you need to work with. Once you understand your time frames you need to work with, we're going to go into the next lesson now, where I'm going to explain to you the 2 time frame rules, all the ups and downs with time frame trading, and how to gauge the money spot with the time frame, and what it means to have multiple time frames. Okay, so on to the next lesson. Okay, welcome back. Now we're discussing time frames now. Okay, so you guys have looked into money spots. Hopefully by now you've mastered it. You've mastered it to such an extent that you can spot them all over the place. The money spot is generally the moment before the market goes, right? Now, what we're going to do with time frames is I'm going to help you refine the money spot. Now, with time frames, there's something called a 2 time frame rule. Okay, this is something that we like to follow at Forex Watchers and Urban Forex. This 2 time frame rule is something I need you to follow as well. The 2 time frame rule is do not go beyond the 2 time frames. Okay, this causes mass confusion, mass irritation in the brain, and you start ending up waiting or entering too early. If you go down extra time frames, you will enter early. If you go up extra time frames, you'll end up waiting all the time. Okay, so whichever side you do it, you're causing pain and panic. Okay, so let's start with some examples here. Now, when you see the markets coming down here, let's say the markets are coming down here, they pull back, they're coming down here. Let's do the rubber band man from the previous lessons that, okay, he's running strong, he rests a little bit, he runs again, beats his record, drags his rest, 30% rest, 40% rest, runs again, and he cannot make even a lower low. Rests again, runs again, cannot even make a lower low. And then he rests 100%. And then he does his last run, and it's like, okay, he can't even go back to where he normally did, and he's out. In this whole process, here comes the buyers. Okay? So in this buying process, it's an uptrend going in. Buyers, pull back, buyers. So this runner going upwards now, he's running, he rests a little bit, he runs again all the way up to here, he rests, he's maintaining grounds, and then he rests down almost 100%. But then look at his try, never goes again. But he's still in buyer's territory, right? If I was to put a line here, it's like, okay, this is still buyer's territory. This is still the area where he's supposed to run up from. He's challenging the guy who started it, but he's just coming down to here and he needs to go up from here. But why does he go down? Okay, so when we look at this in terms of 2 time frame concept, I'm going to put a big circle around this area. Okay, and we're going to go up a time frame. So right now we're looking at this on a 4-hour chart, and we're going to involve one more time frame. That becomes 2 time frames now. We're going to go to the daily chart, which is the time frame above. And I'm going to explain to you why the one above is better than the one below. Okay, let me see where I can find that spot where to go. Did I scroll too far back? Maybe I did. There it is. Okay. When you look at that area right there, you're looking at the markets in terms of this entire move working its way down. Okay? So when you see this entire move working its way down, you're looking at this in terms of sell market. Okay? If it's in a sell market, you're looking at sellers, pullback, sellers. He's got momentum again, but he's resting quite a bit. Now, if he's resting quite a bit, here's your support equals resistance. He's supposed to stop there, supposed to. The guy who started it is up here, so he can challenge the guy up there. But all of this below is still seller's territory. Notice how when he takes his rest of 90%, he comes really fast down into the seller's area. Now that he comes crashing down, one can argue, well, is that an area that he broke, or are we looking at this entire area? Whichever area you look at it, if you do it the immediate way of looking at things, sellers, pullback, sellers, and then buyers take over. Pullback, buyers, no higher highs, but he did breach this high. Okay, let me put a line there. He breached that guy, but then no higher high since then, but then he came crashing down. It's like, okay, sellers are here. That's its pullback support equals to resistance, and the guy who's responsible is this guy. Even if you look at it like that, the whole flow points downwards. Now, the reason why we go with the 2 time frame rule is when you're dealing with a money spot, a money spot is basically one guy says sell, one guy says buy. Which one do you want to lean towards? Okay, for those of you who are jumping ahead and thinking out loud, if you said the higher time frame, that is correct. It is the higher time frame that always will dominate. Okay, now here's the tricky part. The reason why I say 2 time frame is watch what I'm gonna do right now. What if I said, but on the daily chart, Naveen, here's the support equals resistance for that guy. Isn't that supposed to be a buy? You see what I mean by 2 time frames? The more time frames you involve, the more confused you're gonna get, and the more you're gonna be like, well, I don't know what to do anymore. Okay? Same happens when you go down a time frame extra as well. You're gonna start getting confused, like, oh, it's a buy, but right now. It's gonna speed up the things even. So 2 time frames, wherever you are. If you want to trade weekly, then do weekly monthly. You want to trade monthly, do monthly yearly. You want to trade the 1 minute, do 1 minute 5 minute, or 1 minute 3 minute, up to you. But don't involve more time frames. More time frames, more confusion. Okay? Now, generally, whatever time frame you're trading, the higher time frame is your godfather. Okay, so the higher time frame is your godfather, and that higher time frame is supposed to be the time frame that where you say that's my anchor. He's the guy who's going to determine my fate. Now, if you generally go with the higher time frame, one can argue, yeah, but I went from the 4 hour to the daily, but isn't the weekly bigger than the daily? Isn't that more important? Why isn't it going up? You're going to confuse yourself. If you stick to just a higher time frame for you, your odds of winning increase. I'm not saying it's foolproof that you're always going to win. That's never going to be happening, because even for the weekly guy, a monthly might stand in between, right? Always keep that in mind. You want to be working with just one higher time frame. Okay? So going forward, we're going to do some more examples, but I just wanted to lay that out flat. 2 time frames. So every time you see me doing 2 time frames in a webinar or something like that, or even giving public webinars, you know why now. I'm not maybe explaining the situation because it's, it's some stuff we like to keep in-house, but you know why now. There's a lot of things we don't openly talk about, but we do keep it in-house. Okay? All right, so let's move on to the next example. And today, actually, I even posted up from the money spot example number 1. You guys should have a PDF for that. I believe it was New Zealand CAD. It was this chart where we didn't have further market. It was a live market where I was teaching you guys on, and I was telling you I'll post up later on once the data comes out. So it's a few days or a week later now. The data has come out, and I've posted it onto with the video. So you should see it in a PDF somewhere, the result of how it ended up. Okay, so moving forward, let's go get some more examples, yeah? Cool. All right, here we have Aussie USD on the 60-minute time frame. Now, on this chart, we're going to go by looking at the buyers coming up here. So we have the buyers, they have the pullback, they got the buyers, the pullback, the buyers, a little bit of pullback, buyers, a little bit of pullback, buyers. And then we got the big retracements, 150, 200, 300% retracements, which means sellers are here. They're here to rule. Pullback, no lower low, pullback, lower low, and then it starts dominating from there. So it's like sellers, sellers, sellers. Now, in this process of sellers, 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 we're looking at an area. Oh, sorry. We're looking at an area like this. This is all sellers territory. Even though they haven't made a lower low, it's still seller's territory, and the guy responsible for this is this guy. So everything points to a pullback sell in this area, in that area right there. It all points to a pullback sell. But to some people, this can also mean a pullback buy, hence the money spot. Now, we're going to go into that 2 time frame thing again. Since this is the 1 hour time frame, I'm going to go up 1 time frame, which is the 4 hours in this particular case. Also keep in mind, when I went last time from the 4 hours to the daily, the difference between a 4 hour and a daily is 5 candles, right? 6 candles. Okay, there's 6 4-hour candles that make up a 24-hour period. But there's 4 1-hour candles that make up a 4-hour chart, right? So you can choose whatever time frame you want, but just keep the rhythm pretty much the same as much as possible. Okay, I generally keep the rhythm between 1 hour, 4 hour, daily, and weekly. I keep the generic rhythm, but if you have to, modify the rhythm according to what you see. All right, so let's go down to, go up to the 4-hour charts. Let me first circle this entire area so we know where we are. Let me go up to the 4 hours. Let's move out. Where is it? Okay, here we are. Now notice in this area, for the area where we're looking at to sell on the 1 hour, the 4 hour on the other hand, I'll clear this up, okay? And this is that spot that we were looking for the sell. On the 4 hour, on the other hand, is saying buyers, pull back, maintain, 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 buyers, breaks above here. It's all buyers territory. Boom, breaks again, so it's above here. And then keeps going higher, 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 higher. Pullback mode, pullback mode, pullback mode. The guy who started all this is here. And anything above this area is buyer's territory. But even if they come down to this guy, it's still buyer's territory, right? So when we look at it like that, it's like, okay, the buyers are still dominating and they're seeing this as a pullback buy, while the 1 hour is seeing this as a pullback sell. Okay, so we got a money spot there, and that money spot is telling you that if you have to choose, go with your big boy. Go with your godfather. Go with the supreme leader, the guy who's above you, the guy who has more money. Go with that guy. And that's where the safety is. Okay? So now coming back to the original thing that I was saying about no more than 2 time frames, watch this. Imagine if I included 1 more time frame. We would look at this as, well, isn't this like a downward channel coming in? You see how this can mess you up in your thought process? It's like, oh, okay, well, in that case, it's a sell. It's not a buy. Well, yeah, it can be a sell, and later on, it might be a sell later on after it pokes out and comes back in. But look how much time that takes. You have to stick to the time that you see. You have to stick to one big boy above you. And that needs to be so consistent that you get in the rhythm of how long it takes, how long it takes, how long it takes. Instead of, well, I can see this clearly, so that must be coming in from the daily or weekly, and I know that's a bigger boy, so he must be even righter, if that's a word, or more right, or has more influence. And that's where the confusion comes in. So I'm going to give you a quick cheat and say, don't even use more than 2 time frames. It will confuse you, and your body clock will not adjust to it. Okay? You have to spend hours and hours and hours with 2 sets of time frames, master it, and then you can think about including more time frames. Until you don't master it, don't mess with more time frames. I am telling you that will be a major cause of losses. Okay? So 2 time frames. Okay, let's go take a look at another example. Okay, here's the Euro New Zealand on the 5-minute chart. Now, let's take a look at this, how the sellers are coming down and down and down. Now, don't think I'm doing this live. I've already looked at this example ahead of time, okay? And we'll do some live stuff later on in different courses and stuff like that. But for now, I just want to pick out the best examples to give you something that's perfect. And then I'm gonna throw you some crazy examples where it's like, oh crap, which one is it? How do I do this one? So this way you have the best practice, okay? So this one, keep track of this as here comes a seller. Seller, right? Rubber band man theory. He's running. He rests. Let me move the mouse a little bit. He rests up to here, 50%. Comes back down. All right. Doesn't make any lower lows. Rests again. So it's like, is this guy, he's beaten this guy, but then at the same time, he keeps resting again and again and again. Like, he's responsible. Okay. Keeps going. Goes higher. Keeps going. Goes higher. Whoa. He's all the way up. He's all the way up here now. Whoa, look at that. So now, we're looking at a situation where he's breached this area. Okay? So he's breached that area, and now we're looking at this as, this is an area where some people down here are looking at this as an uptrend, that's a pullback buy, or a breakout buy, right? There's those range guys as well, right? So there's a whole bunch of people looking at this in a whole different mindset. Now we can look at this as, this could be a range as well, but because we've been learning with Naveen that we got to do 2 time frame analysis to get the best objective of this, what we're going to do is we're going to research this area on the godfather of this time frame, which is, if this is the 5-minute, I'm going to step it up to the 15-minute to get a better idea. Circle this area. Let's turn this off. Let's go up to the 15 minutes, 1 time frame only. Okay, let's find that spot and notice where that spot is. Now, this spot comes in from a downtrend, but let's take a look at the downtrend in a little bit more detail. Okay, this downtrend started from here, came down to here. Let me first circle it. Started from here and started to come down. He went down, pulled back, went down, no lower low, pulled back, went down, made a lower low, but came right back. Went down, tried to make a lower low, came right back. Went down, made a lower low, and came right back. It's like he never goes lower. That line keeps holding, which means the thing that guy broke was here. Here's the breach he made, and the guy responsible is this circle. So anything below here is looked upon as a sell area. Not to mention, this is that support equals resistance sell area for them. So while some people are looking at that as a buy area on the 5 minutes right here, a miniature pullback buy, these guys are stepping in to prepare for their sells. Hence, money spot. Okay? So when you line these two things up together, the question comes is, do I buy or do I sell? And what's the answer? Okay, I know you wanted to say it out loud. But if you said sell, that is correct, because you want to go with the big boy. You always want to go with the big boy. Yeah? Okay, so let's take a look at one more example of using the money spot with an idea of time frame, so you don't make a simple mistake of, well, which way is it? Okay, so let's get into the next example right now. Okay, so now for the tricky one. We're looking at Euro New Zealand on the 15-minute chart here. Now, when we see this one here as it's coming down and it suddenly starts rolling over and starts going up, look at this little mini uptrend it's making, right? Uptrend, uptrend, uptrend. People here on this time frame are looking at this as a pullback buy sequence, right? But on the other hand, when you see stuff like, I don't have to go to the 1 hour, the higher time frame, but I can actually see the higher time frame probably has this guy as this guy. So it's like, okay, there's a guy right there from the 60 minutes. We can see it. Like, I'm just trying to make you see the 60 minutes from the 15. Okay, I'll show you the 60 minutes in a second, but try to see the big picture. You can see it here on the 15-minute without going to the 60. All right, so the 15-minute buyer is saying buy. All right, the 60-minute guys are saying sell. I'm going to take you to the 60-minute real quick, and I want to show you. Now, in this money spot, the rule says the sell is going to dominate, right? That's the rule. Let me take you up to the 60 minutes. Okay, so on the 60 minutes right there, here we go. I'm going to make that smaller. So that guy is saying sell right there. Because, yes, that is the breach, and since the breach, there's been no lower lows, but no higher highs either, so he's responsible. And it's a downtrend. It's all seller's territory. So it's like, okay, if it's seller's territory, it's a sell and nothing but a sell. Right? Now, here comes the tricky part. The tricky part to this is, yes, I can, step away from my screen a little bit further back, and I can see this big uptrend here. No, let's not get into that. If I say one more time frame, just for the sake of an example, I'm going to go up to the 4-hour time frame, and we're going to find that same spot. Okay, that was further down here, I believe. Yeah, that same spot. For these guys, they're looking at this as an uptrend, right? Okay, that same uptrend that you guys saw by saying I'll step away from my screen a little bit and I can see the uptrend. Yes, for them, this area is in a buy mode right there. Now, to avoid confusion, the reason why I tell you 2 time frames and not 3, let's go back to the 1 hour and the 15-minute time frame, and let's find that spot again. I'll tell you exactly why I mentioned this. Let's go back to that date. It was further down. Where's my arrows? There we go. Is because if you stick to 2 time frames, you're gonna see the guy above you, which is a 60-minute, and that's the answer you go with, saying sell, actually still makes money. Look how low he got. He still makes money before the 4-hour guy kicks in and takes it up a notch. Here's the confusion and the dangerous part where it comes in. If you involve 3 time frame and you say I'm gonna buy it, what's gonna happen is you're gonna get confused on where to buy it, and this extra spike down and stuff is gonna stop you out. You see why the rule comes in of 2 time frames? You can still make money on this sell. It's just the fact that sooner or later the big boy kicks in. Now, every once in a while, the bigger boy higher than that, maybe the daily or the weekly guy sometimes, will just jump in and stop you out. That's the nature of the business. You don't want to stay on top of everything, because the weekly, how often does that kick in? The daily, how often does that kick in? So when you're trading these time frames like the 15-minute and the 1 hour, that's it. Don't worry about the 4 hours. Don't worry about the daily. Involving more time frames is nothing. Blah, 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 blah. Involving more time frames is going to cause nothing but pain and losses. Okay, and it's going to cause you more stuff to think about and process more information. That's only going to make you more. It's going to cause brain fog. That's what it's called. Okay, so hopefully with these 2 time frames and all the time frames and all the lessons. So far, you've completely mastered how to use time frames. You've mastered how to use money spot. You've mastered how to use the buyers and sellers territory. You've mastered how to understand the logic of how the market works. And now it may seem like it's done. You've got it down, but there's more. So next week, I'm going to get you guys some more information that you guys are going to study. And you guys are going to dig in deeper and deeper. And it doesn't end here. I'm going to release more courses that's going to have examples after examples after examples after examples. But I wanted to get your feet. I wanted to drag you with that 1 foot of yours, not even dipping your toe in the water. I wanted to put your entire feet in the water and says, look at what's available here. Okay? You might have been burned in the past with bad trading systems and bad services and bad coaches and mentors and all this stuff, and that's fine. I've been through that myself too, so I really understand what it means to be like, just show me first. Someone please just show me. And this is what we're trying to do here. We're trying to grab you by the hand and by the feet or whatever and be like, look, this is what's out there, and this is the way you're supposed to think, just like my mentors showed me by saying, no, you got this all wrong. You're looking at it in the wrong way. The knowledge is correct. You're just looking at it in the wrong perspective. And when you clear up the perspective, things become a lot easier, doesn't it? Okay, I'm sure you guys can agree with me at this point that things become a lot easier when you just open up the horizons and look at it from a different angle, or the right angle if you want to call it. Okay, so until next week, just hang in there, keep practicing. Next week, here we go. All right, welcome back. We're dealing with pound Aussie here on the 15-minute time frame. And what we're going to be discussing this week is basically something called V formations. Okay, what a V formation is, it's a moment when buyers and sellers start to gain equilibrium. Okay, now it might not make sense when I just say it like that, so let me just show you. Okay, so let's say we're on the 15-minute. Again, everything I teach applies to every time frame. It doesn't have any restrictions. Now, when you take a look at this and you see the markets are on its way down. Now, imagine you're looking at this rubber band man going down, and this is his last run, right? So considering that's his last run right here, okay, he goes down, he rests a little bit, tries to go down, rests a little bit, tries to go down, and then he rests all the way up to here. This piece right here, from where he started to where he ended up resting, is a V formation, which means basically the runner is quitting. Okay, a V formation is like the first sign for me that the markets are preparing for a turn. Okay, and these are quite common areas. You'll see them again and again. We'll go through various examples of how a V formation works. We'll also go into when you see a V formation, how do you know if it's real or not, and so on and so forth. So this also plugs into all the information you've been learning so far. You can't use it on its own because it won't work. Now, here's an example of when you try to use it on its own. Okay, so let's say the markets are coming down. Here's the guy who rests from here. He runs down to here and then does all this stuff, and then he rests a lot all the way up to here. That's a V formation right there. But it does not mean the market went into a buy, right? It's still sold, so that like the guy came back. Okay, so we'll go into all of this stuff on when it's safe, when it's not safe, and also how do you plug this in with timing and all that stuff. Okay, so let's get some examples in. Okay, so this is Euro Aussie on the weekly chart. Let's first start getting used to spotting these V formations. Okay, so the V formation, as you saw in the last video, basically is the last moment the running man with the rubber band man basically stops running. He takes a big rest, right? Or it pulls him back quite a bit. So when you take a look at this starting from here, let's say the markets are going down from here. He runs down this far, rests this much, 50%. Runs again, rests again. Now, some people might get confused in this area where he runs down and he comes all the way back. That's something we don't want. We want to see that doesn't happen to you. When he needs to go back to where he came from. See, he breached this guy. He never made a lower low, but this is the critical part. He needs to go back to challenge this guy to say, okay, that's a V formation. Until then, it's not. Okay, so he keeps going down, breaches the new low, which is right here. Once he breaches the new low, which is right there, look at him. He's coming down again. And then he rests, but he gets up only 80%. Coming down again, rest, coming down again, rest. All of this is in seller's territory. He needs to breach and challenge this guy to call it a V formation. So far, nothing. He gets down to here, makes a lower low, and then comes right back. But then look at this. Boom, right to the top. He goes even through him. That is what we call a lopsided V formation. A lopsided V formation is a lot more powerful, which means the rest was so strong, he not only just gave up, he actually let the other side take over. Okay? Usually a V formation ends up almost at equilibrium, but then a lopsided one becomes more powerful because it's like he just gave up his throne, basically. Okay? So that's how you spot it. You're not going to be looking at little areas like this. If I say that piece right there, that's not you. Okay? Don't forget that. That's not going to be you. Okay, amateurs do that, and you don't want to be doing that. You don't want to be looking at the nitty-gritty stuff right there. You want to keep track of whose territory you're in. You must know your territory. Okay, so these V formations are very, very critical, and if it's read the wrong way, it can give you the wrong idea, because anyone who's looking at this V formation is preparing for longs after it, and you can see exactly what happens to them. They'll get stopped out. Okay. All right. So let's continue. Let's take a look at some more examples further down here. Markets are going up. They reach this area up here. Gets high, no higher high. Gets down. Gets high, no higher high. Gets down. Comes down here. Goes up to there. Comes down to here. Now, for him to make a V formation, the market needs to come all the way back down. So that's a V formation for him, all the way down to here. Now, this one looks like, oh man, I wish I would have known that earlier, because that's a big V formation. Unfortunately, when you have the market move that swiftly, that strong, your V formation is going to end up much later. Which means if you're seeing stuff like that, you're better off picking a different pair. Okay? Because a lot of people will be looking at this as a buy once it gets up that strong, coming up to this thing that strong. Any pullback above support equals resistance is a buy, like that. But if this is weekly chart, your godfather monthly chart, for them, they're looking at it as a sell. It's a money spot. Okay, so they see that as a sell. So a V formation for this ends up all the way down to here, but then when you see a V formation like that, you're already looking at this like, oh man, well, I missed a train. That's like really, really far away. So it all depends on how you read it, but you don't want to read the nitty gritty and say, that's a V formation right there. Wait, let me move this like that. That little piece right there. If you do it like that, then what's going to happen is you're going to start thinking it's a sell instantly without seeing that you're in the buyer's territory. Now, if you combine this together, however, with your story, the story of, okay, where am I in terms of my big boy? Where am I in terms of my godfather and stuff like that? Then you basically have an idea of which way you're headed, and your V formations, even if you play with it nitty gritty, you get a fair understanding. But notice this, let's say you did see that as a V formation, you're like, oh man, looks like the buyers are quitting, I should prepare for sells. Will you be able to withstand that whipsaw all the way to the top? And if it does, when it comes down, will you know to hold on to this far? Or after seeing that whipsaw go up that high and your stop loss being enormous, are you going to say when the market comes down to here that, okay, that's it, I'm going to close it? Because of how fearful you were when it came up this high that fast. Okay, so that's a little bit psychological. We'll get into psychology in a whole different course, but as of right now, as you see that this can happen. So stick to what I'm trying to show you on how to read your V formations in a unique way. Okay, and that will save you countless amounts of time and effort. Okay, let's go on to some more examples, and we'll take it from there. Okay, so here we go. We got USD CAD on the 60 minutes here. And let's take a look at this one. Now, this one is an uptrend. Now, I'm going to show you how in an uptrend and how things look in a downtrend. Okay, we're going to cover it in this video. So imagine you're that rubber band man running up this way, right? You're running your little race, you're resting a bit, you're running up higher, you're breaking records. You break your records like this, you went higher than this. The guy started it all is down here. He gets up to here, rests a little bit, he goes up higher. Okay, you broke that record. And then you rest, you never make a higher high, you come down here and it's like, okay, that's a V formation. Now, that's a V formation, so it should sell, right? Okay, because V formation basically indicate that, well, that buyer is dead. He's finished. Okay, so right now we're just spotting V formations, and if that's what you're saying, that's a V formation, that's correct. And those of you who are watching this and saying, I know that's a V formation, but I can also see this entire picture is like this kind of thing. Okay, then you're a step ahead, and that's also correct. So that one helps you stay out of trouble, and we'll get into how to stay out of trouble and all that stuff in a bit. But But this is correct to be calling this a V formation after it breaks that area. Okay, that basically tells you the buyer is dead. Now, when you see a V formation like that, the reason why I'm trying to teach you this as well, even though it's in the wrong direction, because it tries to tell you the buyers finished taking their turn. Now it's the seller's turn. You can't rejoin the buy unless you wait for the sellers to come take their turn. Okay, so that is not a seller. Your seller is here. Does that make sense? So when you understand situations like this, you start to get an idea of, okay, now that I know when the sellers are coming, I can stalk the seller, see if imagine if I am the seller and I'm running down and down, and whenever I get tired and I get a V formation, it's like, okay, here comes the buyers again. The buyers are back. Okay? So when you think of it in that terminology, it's like, okay, I'm starting to see how this game is working. And once you get your V formation, there's one common thing that happens after a V formation. You're looking for one last run. Okay? So one last run. So imagine this thing comes all the way down to here, breaches this, and then you get this V formation coming up. It's like 90%. It's not the highest thing, but it's 90%. You're aware that it's an uptrend. You're aware of the situation that it's all holding above this guy who's looking at this as a buy from here. Okay, once you figure all that stuff out and you see this V formation kick in, he tries to do one last run, which is going to be a couple candles. Okay, his one last run down again. And that's going to be your moment to decide, okay, it's time. Okay, now let me show you some of this stuff on a different example. So let's take a look at further up the road. Now, when you go up to here, you can say, well, I can see a red candle there, and then that must be a V formation. No. He breached above this area. Let me delete all this. He breached above this little halt. It's not a red candle. It's a halt. Look how markets wait there for 4 hours. Okay? Notice how I'm using the word time. I'm not just saying a candle color. Don't get caught up with candle color. Okay? Because not on the 60-minute, but imagine if you're on the 4-hour chart, a candle color can actually just change a little bit, because on your chart, your 4-hour starts from a different time, and my chart, my 4-hour might start in a different time. I might not even see it as red. I might even see it as a green still, just with a little wick or a tail on it. Okay? So don't go with just candle colors. It'll throw you off. You'll actually see some of my students sometimes, if they're presenting, I've stripped away their colors. Their charts are going to look like bare bones. They look like one color. So they can focus more on what's happening rather than how can I get caught up into the color scheme and, think Christmas lights. So when you look at it, stuff like this, and you're saying, okay, we're going higher high sequence, and he's breaching out this area, and since then he hasn't made a higher high, it's come all the way down. This is all buyer's territory. No V formation yet. Breaches it higher from here. Okay, here we go. Breaches it higher from here. Who's responsible? This fella is responsible. Ooh, here we go. This fella's responsible, and look at that. As soon as he breaches up higher, he comes 90% to it. Those without patience won't see that it's a tail, because they're too anxious. Oh man, it's a V formation. I need to sell it now. Those with the patience let the candle close and see, no, it's not a V formation yet. The buy is still on. Okay, it's still in buyer's territory. So he does this thing, blah, 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 gets up to here, halt, breach. Halt and breach means line continues. Okay? Halt again up here, but then the breach never goes higher and comes right back down. You have your V formation. Now that you have your V formation, you're looking at this as it's the seller's turn. As the V formation comes in, you as the buyer who was running upwards might do one last run. And if that last run proves you can't make it, that's when the sell begins. So if you can master this area, how the V formation happens, followed by the last run, you can time the market in a way where you can catch the moves, the big moves. Okay? But now, looking at this entire scenario, if you're doing it the wrong way, and you know that this is all in the buyer's territory, that can catch you off guard. Okay? But if you're looking at this as a sell and you're like, the buyer's territory is far away, I'm going to do what's called a counter trend trade, then this is for you. Okay? Counter trend trades are advanced and highly, highly, highly not recommended by me. But I'm teaching you anyways, so you have the knowledge of when people take counter trend trades, don't knock them down. Don't tell them it's wrong. Don't tell them they can't do it, or it's... Let them try it. Let them do it. It's just less safer. Let's put it that way. Okay? It's just less safer. Some people love the thrill of a counter trend trade, and that's fine. I need you to start stepping into profitable trades first before playing with thrill. Okay? We're here to make money, not here to gamble. All right, so as the market comes down, you know at this stage it's a seller's market. Seller, running, right? He's running down, rests a little bit, runs down a lot, and then rest, V formation to the top. Okay? As he's doing all this rest stuff, he never makes a lower low, but then he does a V formation. Now, what kind of V formation is this? Lopsided. That lopsided V formation starts to give you an idea that, he's strong. The buyer is strong. But that same seller makes his last attempt. Okay? This seller who is responsible makes his last attempt to do a run. You have to allow him his attempt to run. He does his attempt to run, and after, 6-7 hours, he actually makes it. He actually makes it. Now, why does he make it? Usually, after a few tries, like that one, he doesn't succeed. After a few tries, like this one, he doesn't succeed. But why here he makes it? Because now you're not just looking at a V formation, but you're also looking at a range. This can go oblivious to many people while they're just looking for a buy because they're in buyer's territory. You got to be careful with these things. So the seller makes it. He makes it and pushes the market down, but look at how far he goes down. He gets down to the same lows area, and then he goes chop, 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 chop. Buyer kicks back in. Okay? So these are areas where you can reevaluate the situation. Now, a person who's looking at this as a range is simply just waiting down here saying, I can't wait to buy it. He has no idea of the story of a V formation just kicked in. This is the last run of the seller. And then if the run fails, the buyers take over. Okay, so this is a money-making spot as well. Now this one, I'm sorry that it was a bit difficult on the second video, but I just wanted to get you guys a heads up. You can watch this again and again to make sure as you go through all the videos to come back to get a recap on this one. Everything else is fine. So again, I pushed it a little bit longer than usual because these are interesting topics of V formation, and I don't want to leave anything out. Okay. On to the next example. Okay, here we have USD yen on the 15-minute chart. Now, this example is actually a cool one. You'll like this one here because this goes with also money spots, and this also goes in with V formation and mastering that V formation area as well. So let's take a look at this buyer here, right? So this buyer is going on very strong. He's got a lot of money. He's got a lot of energy. He rests a little bit. He runs a little bit more, rests a little bit, and then he keeps running. Okay? Now, his last breach was here. Okay, he breached here, he rested. He rested for a few candles, and then he breached, he ran further. So, once he breached, he ran further. That's the line, and the guy responsible is here. That's the guy who started it all, right? As he goes up, he pulls back. He goes up, he pulls back. That is not a V formation there. This is not the buyer. This is not a V formation. This is just all a pullback for this buyer in this buyer's territory still. However, some people start looking at this as a sell because it starts coming down so dramatically. And that's fine. That dramatic sell that's coming in, for us it's like, okay, he's still in the buyer's territory here. Okay, he's coming down to challenge this guy. It doesn't mean he's broken his spirit. He's coming down, or imagine this guy taking a full rest, okay? and then he's got his last run to do anyways. But in this process, these sellers are looking at this as pullback, support equals resistance here. For them, that's a sell right there. Okay, that's a sell right there. For these guys, from the left side, they're looking at all of this is still in buyer's territory. Now the question comes is, where do we see the seller coming in, pulling back, seller coming in, pulling back, seller coming in? But his last seller that did the breach, notice how high he comes up. He comes up like a V formation here, very, very high in the area of a money spot. He does the rest, last run, couldn't make it, and blast. Okay? So here goes your timing part of the things. Now, it's not a range, so you're not going to have a complete drop. So as you enter anywhere in this zone where the money spot is, you anticipate the market. You're actually getting in prior to everybody else. Because most people, what they'll do is they'll get in only after a price breach or a test onto the other side or something like that. And in most cases, they're very, very late because the price will end up here somewhere before they get in. Okay, I'm trying to teach you how to get in here, in this zone here. It's below SNR. It's below the trend line. It's in the area where people don't take action. You will. You will take that action because you're learning this process now. Okay, and in my opinion, this is the best course of action to take because you want to anticipate, not participate, right? Participate makes you get in on the trades very, very late. All right, so let's take a look at how it reacted further down. He went up, he halted, breached, went up this high. I'm going to put a line right there. Okay, so that's your line right there. He breached, went higher, pulled back 80%, still in the buyer's territory, went up higher, came down, still in buyer's territory, and then as this first red bar came in, that's your V formation. That's your V formation. But now it's like, well, if that's my V formation, look how far it is. Okay, it's not equilibrium. It's in fact very, very lopsided. And the fact that it's lopsided, we're waiting for the last buyer's turn, the last buyer to do his running. But look how low the V formation takes to end. Once the V formation finally ended, it's like, okay, here comes the buyer trying to take his turn. But how is that even reliable anymore, considering how low it's dropped? Okay, so you got to be aware of extreme lopsidedness. Okay, and in this market, the buyer gets up even this high. Okay, it does not breach his own record, but he gets up very, very high. Okay, so another situation here where your entries happen much, much later. So patience of waiting through this because of this extreme lopsidedness. And most people will look at this as a buy, when in reality it's just this buyer has one last round to go because this lopsidedness keeps coming down and down and down. Like he's really quitting. But so again, a little bit higher advanced knowledge on this one. This also goes a lot with territories and stuff like that as well from a higher time frame, if you want to look at it in that sense. If this is the 15, if you go to the 60, you'll see a whole different story. Why will you see a whole different story? Because these highs never existed. They went high, came back. They went high, came back. So let's go to the 1 hour and take a look at it. I'm going to circle this area. I'm going to go up to the 1 hour. And there we go. Look at that. The breach happened above here. Temporary wait. No higher highs. No higher highs. All this is still buyer's territory. Okay? That's your one godfather above you. Your one higher only. Cool? So keep these things in mind. And let's move on to the next lesson next week. So keep practicing V formations. Keep practicing your money spots. Money spots are very important. On its own, it won't work. V formations are very powerful. They're your heads up that something's going to happen. Imagine it this way. When you see a V formation, or what I'm going to teach you next week, probes, spikes, fake outs, whatever. These things, for me, are like pulling the pin out of a grenade. You know when you pull the pin out of a grenade, what's the thing that goes in your mind? Any moment now, any moment now, any moment now, kaboom. It's like that. So when you see a V formation in a money spot area, it's like, it's time. It's time, prepare. Okay? And until then, you just do analysis. After the V formations and the money spots and all that stuff, or what I'm going to teach you next week, you start getting your gears ready. You start doing all your calculations for your money management. You start getting preparing your A-B types of trades. Or I'm not going to go into A-B types of trades here, which is the two scenarios that can happen and how do you prepare for them. Or you're going to start getting ready for your psychology and your physiology before the trade happens. So you're going to start your preparation before you do all your analysis up until your V formation, and you begin all your preparation for your trade after the V formation, basically. So you want to get your trade numbers ready, you want to get your mindset ready, you want to get your physical stuff ready, you want to get your options ready of what's going to happen if scenario A happens, what's going to happen if scenario B happens, what's my outcome from this, what's my expectations from this, what happens if I don't meet my expectations, and so on and so forth. You want to get all that stuff ready. Okay, and then you pull the trigger. Okay, that's how you trade a perfect trade. You build all the information up, and then you add in all these extra pieces that you need prior to the trade, and then you pull the trigger. If you just look at a chart and you say support equals resistance, I need to buy it. No. You can get lucky every now and then, but it's just not going to cut it. Okay? And you guys are better than that. And that's why you're here, and that's why I'm here. Okay? So we're trying to make this happen. So let's move on to the next week. The next week we're going to be discussing probes, fake outs, spikes. Okay? It's labeled as many different terminologies throughout the internet. I'm going to show you what it actually means. All right. I'll see you next week. Cheers. All right. Welcome back. Okay, so this week's topic, we're going to be discussing probes, spike outs, or false breakouts. Okay? Now, this is also one of my favorite topics out of all the topics that I teach. Okay, now the reason being is spike outs are just like V formations give you a heads up that something's about to happen. A spike out intensifies it. Okay, a probe intensifies it because I can feel that someone is in trouble. Okay, like a spike out, right? When there's a breakout happening in a range, for example, let's say there's a range like this. Not the straight line, but let's say there's a range like this, and as the market goes like this, it goes up, it goes down, goes up, goes down, but then as it spikes out, but then it comes right back down, all the breakout traders who bought are in trouble, right? So when I see signs like that, it tells me that price does not want to go up. Okay, there's someone there. It doesn't want to go up. There's someone there who smacks it down. The rubber band man's got power. And that tells me whatever the big story might be. Let's say the big story is coming down and this is all seller's territory. Okay? If this is all seller's territory, this tells me they're here. That's a horrible check mark. But it tells me they're here. They're alive. And that gives me a heads up that it's time to go. It's time to prepare for these movements. So let's get into probes and spike outs or false breakouts. So since they're called so many different names, we're just going to label them as probes going forward from here on out, okay? Now, probes they come in various different areas. They can come in ranges. They can come in as trends. They can come in channels. And for the most part, it's very easy to spot them if there's already data, but sometimes it becomes hard to see them if the market is live. And I'm going to explain the two different variations of why that happens. Now, take a look here. You see how the market keeps making a higher high? When the market makes a higher high, there's no probe. It holds. When I put the line here, he makes a higher high, no probe. When I put the line here, there isn't no higher high. It goes higher, but it comes right back. that's a probe. That's a false breakout. Or if I look at it in a big picture, all the price that went above here is not real, it's fake. Because it never stayed up there. It just, every time it goes up, it comes right back. It goes up, comes right back. These are probes. These are signs that someone is here. Obviously, we know who, right? Blah, 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 right there. Okay, coming from the big picture. But anyways, these are signs that someone is there, and that's a probe there. But now notice, if you were trading it live, right? And then 1 hour passes by, 2 hours passes by, and on your third hour, it's like, how do I know it's going to be a probe or not? Okay, so these are the things you need to train yourself when you see these double tops, these channels and stuff like that, to see, is there a possibility that a probe can happen? So the only way to get good at probes is to trade and monitor and observe probes time and time and time and time and time again. Okay, so it comes back to our, you need to master it. If you master it, they will start coming to you naturally. Okay, because spotting them in regular conditions, like right here, I just spotted one right now, and I can see that there was no lower low here. Okay, so these are all just probes below, which means there's someone down there who smacks it up, which means buyers want to come in. Okay, but as I see this buyer wants to come in, here's the point. How would I know on this green candle that this is going to be a probe? I don't know. There's no way I can know, right? So you got to do your research ahead of time to be like, okay, wait, first let me figure out whose territory am I in. If I know my territory really, really well, then I will have an idea of a probe can happen. And if the probe happens, let's say you do end up selling here, but then you get stopped out on third green candle here. You should be able to spot that it's not a support equals resistance, but it's also a potential, it's coming back into where it started from. So it's like, if that's the case, then that could be a probe. Now notice when you see these situations, it's like all of this is inside the seller's area the whole time. So you know it's a sell, but then when you see a probe like this happen, you're like, okay, not now, there's someone there. And then it goes down again, spikes back, and then it goes up, but this time it probes on the upper side. Notice if I draw a straight line here from the upper part of the range, it probes on the upper side. Now it's like, okay, it goes more with the story. Okay, so this is a little introduction to probes. Probes give you a very good clean outlook of there was no lower low, there was no higher high. Now, probes also become disguise, and we'll go into this, the disguises and all that stuff in a bit. So let's go on to some examples. Okay, on this example, we're going to be using pound CAD on the 60-minute. Now, I prepared this one in a way so I can have you focus on exactly how the probe is developed. Now, just like we're looking at territories all the time, right? We're always constantly monitoring, like, how do I know which territory are we in? So for example, let's take a look at this one. As the markets are going down, after this chop, 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 it must breach it. Once it breaches it, we're like, okay, it's below all this. This is the territory, and that's the guy responsible. Then he goes all the way down to here. He holds for 3 candles, comes down, and comes right back up. Okay, so it's like, is this the territory? Has he breached anything? No. Later on, he breaches it. He gets down to here. He still doesn't go through the low, and then he breaks it finally. We're going to move the line down to there. Okay. As he goes ups and down, ups and down, ups and down, pokes through, probes it. As he probes it, it's preparing. And as he's preparing, it's getting ready for the sell, because this is also money spot, right? As you know, that's a little uptrend. But for these guys, it's a sell territory. Okay, money spot with the probe, V formation, all that stuff, preparing for the sells. Sells begin, comes all the way down to here. He holds it. As he holds it, waiting, 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 goes below again, holds it, goes below again, and then it goes up. To challenge this guy, goes higher, goes up, goes down, goes up, goes down, comes back to sell mode. Sales begin again. I'm going to put the line right there. Sales begin again. He breaks that area there. Sells right there. And then he breaches the low even lower. So I'm going to put the line right here because that's the breach he's done. Now I want you to watch it piece by piece. As the breach is done, he must hold below that line, right? So we can say it's officially going. Just like here, when he breached below it on this red bar, he must hold below that breach to confirm it's a lower low. So when we see the pullback come in, here we go, he's coming out, he's starting to hold. But look at where the pullback comes in. Comes right above. Now this whole area when it comes right above and he starts probing like that. Now we don't know it's a range yet, but he goes up to start to develop something like a range. But notice how here on this time frame you see candles coming down. What if I do this? Let me show you something here. Let me put a circle right here. I'm going to go up to the 4-hour chart. Same spot. Where is it? Where is it? There you go. Now what do you see here? Would you draw that purple line the way we did? Right? You wouldn't say that the market went down there. It's like, oh, it's just a probe. That's what a probe actually is. It's just a little tail or a wick on a different time frame. So the better you can monitor stuff like this, the more you know of where your boundaries are. So for example, if you can see this as a probe, that this area below, all of this area is just a probe, then you will know that your true support equals resistance is not here, but actually here. And that's when you extend it out and you're like, oh, that makes sense. Okay? If you're looking at it even on a higher time frame and you see anything below here and all of this that it came right back up is a probe, okay, true support equals resistance there. Okay, so there's many ways to look at how probes get developed. Generally, the concept happens when there's no lower lows and no higher high sequences. Okay, it looks like it's a higher high, it gets everyone involved, and then it comes right back. Those are the best probes. Okay, so it's one of those things where I told you guys, anticipate, don't participate. Those who participate and then it comes right back in their face, for us that's a probe, and probe for us means opportunity. On to the next example. Okay, so this one is New Zealand USD on the 15 minutes. Now a probe is actually like a activation trigger. Okay, it's unlike a V formation. A probe actually tries to say like it's about to go. It's like the final step. Okay, so now, excuse me. Now, as you can see that this is an uptrend, right? And in an uptrend, you see that there is money spots being created here, right? This is a buyer's territory. Wait, let me get this line out. All of this is a buyer's territory above here. Okay, while for someone else who's looking at this as a downtrend is saying, seller's territory, right? Now buyer's territory, seller's territory coming in, big boys saying buy, but then this happens, a sharp drop, and it's like, well, whose market is it? Remember, he needs to go and challenge this guy anyways. Okay, if he hasn't breached that guy, it's still buyer's territory. But the moment he comes right back in to the bottom of the base, it's like, it's a sign. Prepare right now. Okay? So your money spot probes are very, very ideal. Okay, let's take a look at some more money spot probes here. Let me see if I can find it on this same chart, if I can drag it across. So we got some downtrend coming in here. Downtrend, 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 downtrend. Sellers come in, pullback, chop, 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 which means wait period, breach. Sellers come in again. We're gonna take the chop area and say that is seller's territory. And here is the guy responsible up here. And as he comes to here, and he starts to go in an uptrend here, people are looking at the money spot here saying this is a pullback buy area. The big boy says that's a sell area. But this probe right here, the breach and return, shows you that this high right here never existed. Okay, it's a faker. It's just a tail. Like, imagine if I was to draw this. Let me do this. Sorry. Imagine if I was to draw this. Okay, I'm gonna put a circle and I want you to focus on just that area. Okay, we're going into a little bit of candlestick course, but that's okay. Imagine I was supposed to draw this piece here, just that, in one candle. How would it look like? Here's the opening price. Okay, so I'm going to draw the opening price right there. Here's the closing price. Okay. But, oh, sorry, here's the closing price right here, the last candle, which is right there. Okay, here's the highest point up here. So that's going to be a wick till there. And that's how your candle looks. And it's green because it went high, right? So notice this big wick on top. It's trying to tell you nothing happened up there, but in fact someone smacked it down. So if you draw a support line straight across, it's like somebody smacked it down there. And then according to this candle, that high never existed. Someone smacked it down. Okay, let's take a look at some more examples. Let's clear out all this. Let's do it again. And let's take a look at this. So sellers coming down to here, pullback sellers, pullback sellers, pullback sellers. Now this whole situation breached this spot. Okay, little itty bitty weights here. Keeps going down, keeps going down, keeps going down. Now we can draw this zone. Be like, okay, well, how many weights did we have? It's a 15-minute chart. Goes down, 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 down. Candle 1, candle 2, candle 3. 3 weights here. Candle 1, candle 2, candle 3. 3 weights here. Candle 1, candle 2, candle 3. 3 weights here. So each of these are breaches as it goes lower and lower and lower. Now, the last breach that he did right here wasn't real. He came right back. So where's the actual breach? There. Now that the breach is there, notice how we had a probe on the bottom that says, I'm not interested in going down. Someone is here. Okay, so you put down the skull or question mark or something that, whoa, watch out, somebody's there. Okay, on the flip side of things, as it goes up, he comes right back down. Whoa, exclamation mark, somebody is there. But knowing that it's in a seller's territory, you can't really activate the sell immediately right here because right below you is like, wait a minute, there's somebody there. There's somebody there. It goes up once again, leaves wicks and tails and everything, holds above it, but then it starts coming crashing down. And this time he's able to go through it. See, he gets almost 50% further. But you had to play chicken with him for a bit. Okay? All this information is useful in one way, but you have to use this all in conjunction together. For example, we have to use this together with the rubber band man theory of how much he's getting tired. You have to use this in conjunction that we're trying to make a range because he's resting way too much, but he's running again back to the same areas and he's resting way too much. So you have to understand that concept as well, so you know when to pull the trigger. And in this whole concept, understanding where a probe shows up gives you the confidence of how the trade is going to play out. So anything that I teach you cannot be used in solarity. It has to be used in conjunction with other lessons that I've taught you earlier. Okay, this is why it's called the core fundamentals, because whatever I'm going to teach you going forth in other courses and stuff like that, it all ties into these core fundamentals. Okay, it might look like it's a trading system, it's a whole trading strategy right here. This, again, is the tip of the iceberg. We're just getting started. Okay, so all of this will get you prepared for the market out there so you can at least start turning profits. And then welcome to the 5%, and we'll work on building and mastering and working on getting better, because most people who are just trying to turn a profit are not thinking about psychology. They're not thinking about how do I be better than yesterday. They're not thinking about performance. They're just thinking, God, I just want to learn how to turn a profit. I just need a trading system, a strategy. So there is no mindset involved. But once they turn a profit, they don't know how to keep it. They don't know how to grow it. They don't know what to do with it. So these all things come later. And I understand that. I used to get teachers trying to force psychology on me ahead of time. And I was like, wait. I don't need psychology right now. All I need to know is how to trade first. And I never understood it. So that's why I understand how you guys might feel too. Like, wait, we don't need psychology right now. Let's just get to the bare bones first. Okay? Once we get the bare bones out of the way, we'll learn how to master things, how to really become an expert at becoming an expert. All right? So, on to the next example. All right. So we've made it down to your final video. Good. I want you guys to congratulate your own self right now for getting this far and staying put. 7 weeks is a long time to, stay grounded and keep studying and stuff like that. So good job on that. I salute you for that. Now, we're down to the last video. I want you guys to finish strong. I want you guys to also keep practicing these things. Practice. Every video almost, I've been saying one thing only. Mastery. Mastery is key. And mastery does not come with just by watching my videos. Mastery comes by watching the videos, practicing, going out there onto the real world, trying it out, taking notes, learning from the mistakes, coming back to rewatch the videos, and going out there again. Okay? Because practice makes perfect. So, if you're watching this right now or rewatching this right now, remind yourself of why you're doing this. Remind yourself of why you pulled out your credit card to make this transaction. Remind yourself of why you needed this. Get the fire pumping in your body and let's get started. Okay? So this final example here. We're looking at pound yen, 15 minutes. Now, I'm going to show you how probes can also be very important to find true support and resistance. Okay? So, to find true support and resistance, you're going to have to read the market from left to right. If you skip data like this, when I say someone to draw support resistance, this is what they do for me. They say, okay, like that. That's the support equals resistance. And then they're like, no, actually, that's a uptrend line. Sorry. So they start doing this. And then they say, yeah, that's an uptrend line. That's what I meant. My bad. Okay? But when you do stuff from left to right, what you're going to notice is sellers started from here. They made their way all the way down to here. From this point, when they made it down to here, they retraced, came lower, came back. Came lower, came back. Came lower, came back. True support and resistance still holds here. And it's still running. Notice this. Came down, came back, came down, came back. If you understand this very carefully, you will spot moments like this for true support and resistance before takeoff. Okay? This is like that final last pullback. It's like the final frontier. It's like the train's leaving and they come back for you and saying, are you getting on board? Because it's the last chance I'm giving you. Okay? This is also what we call the safe way to get in. Okay? You can anticipate here and jump in, or you can wait for the second chance to come and get in knowing that you're safe now. Okay? If you're dealing with large lump sum of money, I would say go with the second piece. Okay? If you're more aggressive, you're going to be trading here. Okay? So, let's take a look at some more true examples of support resistance. This, not support resistance. This, yes. Starting from left to right. Yes. Probe, Two probes that come out of it. Okay? And that gives you true support and resistance. That gives you moments prior to the blast, like this. They bounce from true support equals resistance. Moments prior to the blast. This. True support equals resistance. Okay? Now, let's take a look at some more examples. So, sellers coming in. Seller's territory. We're aware of that, right? The guy responsible up here. Comes down to this low, pulls back, no lower low. Pulls back, no lower low. Pulls back, no lower low. Pulls back, comes down to here, lower low, but jumps right back in. Okay. But then he holds, comes down, lower low, but jumps right back in. It's like, where is my true support? Let's start drawing it. Starts from here and gets extended. Okay, true support holding. Right there. But not important to us. We're sellers. Seller's territory. So this is turning into a range possibly. And if it's turning into a range, we're not going to buy from there quite yet. Here's the range developing. Comes down again, jumps right back in. Extend this line. Oh, let me just drag it across, okay? Extend this line to there. And now we're starting to notice it's starting to hold on the bottom side of things. It is no longer in probe territory because when the first probe happened here, this large one here, notice how the market tried to go into that probe but comes right back around this price down here where it becomes more and more aggressive. Okay, some of you might call that supply and demand. Some of you might call that a fake out, whatever it is. You go to a higher time frame, they're just tails. That's one way to look at it. The other way to look at it is every time price goes there, someone smacks it up really hard. A third way to look at it, whenever a seller goes there, he's scared of something that he removes his money that the price comes right back up. Okay, 3 different ways to look at it. Okay, but they all point to one thing. They don't want this here. Whatever's happening down here, they don't want it to happen. Once it comes back and it holds. Now, even if they don't want it down here, price doesn't go higher either. Because this guy is more powerful and this guy is Mr. Godfather. Right? So as the markets then fight for it around here, fight, it starts to drop lower and lower and lower. Okay? This range continues for a while, actually. Wow. Okay, but mini trade in there, sorry. There we go. Okay, then it starts holding below. But a probe will stop your progress. If it's a probe on your side, it will help your progress. If it's a probe on the other side of where you want to go, it will halt your progress. Okay? That means you get another chance if you know that information ahead of time. So always draw your true support and resistance based on left to right. Do not skip data and say, well, I think my support resistance is here because Naveen taught me probes. Well, you skip this part. Okay? So you got to be careful with that. When you do this stuff like that, you can say, yeah, that can be a little bit of probe there, and then this can be my true support. But then you're missing of all the data that says you can sell from up here. Okay? So keep these things in mind. Again, probes are very, very valuable. They go very well with V formations. V formations go very well with money spots. Money spots can't be done without having an understanding of time frames. Time frames and money spots cannot be done without having an understanding of whose territory you're in, buyers and sellers. Buyers and sellers cannot be understood by understanding the simple logic of how trading works. Okay, so very good with congratulations once again with completing the course. You've come very, very far. I think you've learned a lot of things up until now and brushed up on some of your knowledge if you've had some background and training with Forex. So I want to congratulate you for getting this far, and I hope to see you soon in my other courses. But please leave a review if you can, or leave me some comments below. I would love to hear from you and see how your performance is going. Let me know how your trades are going as well. I'm always happy to hear success stories and stuff like that. Thanks a lot. Have a good one.